Kevin is much more interested than most people, by the way, in the balance sheet.
I think that Kevin's a brilliant guy, and I think that we'd all be very lucky to have him.
Kevin is very talented, but I don't know if it's going to be him, but he's a very talented guy.
So you're here tomorrow to ring the bell. Congratulations, man. You have done so much. 1.8 million YouTube viewers. People love you. People look up to you.
13 years ago, I stood over there looking at this very door, wondering what it would be like on the inside. Now, I have my name on the New York Stock Exchange badge, and I can go inside. I took my enthusiasm for the market and money and started learning everything I could about real estate. I would be the most transparent governor that would exist, and you'd have my commentary every single day. I became a licensed financial advisor.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Always great to have you on. Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.
It is time to introduce the company. Introducing
Reinvest.
Invest at Scale with Meet Kevin.
Welcome back to another Market Open live stream. Today, we just had a settlement between Meta and the state of California, which resolves one of their lawsuits. We jump on over to the Alpha Wire service. Oh, I gotta bring it up again. We jump on over to the Alpha Wire service. We would find, I'll just read it to you, Meta agrees to pay $2.2 billion as part of its settlement to California to resolve all legal claims. This resolves all state claims in federal and state courts across the country. So I'm a little unclear if that resolves literally all the various lawsuits there. I mean, they got lots of lawsuits, right, related to these social media claims. So that's going to be interesting to break that down and kind of read some details on that. I'm sure we'll get the answer on that soonish. But that's pretty good. You know, that helps boost Meta. And Meta, you know, in my take, is a fantastic advertising play, mostly because they've been so beat up because people sort of look at Zuck as, oh, he's going to, you know, spend us into oblivion again, kind of like he did with Reality Labs and the metaverse, right? And so it's got a lot of weight on it. It's been experiencing one heck of a downtrend here. Yeah, I mean, you could see the downtrend pretty clearly on the top lines. So if we draw a trend line on the top, I don't have a good trend for the bottom. Let's see what we got here. Can we get a good trend line here? Yeah, that's not bad. That's not a bad trend line at all. And then the bottom, let's make that one, let's lock that into place, and let's grab, we're going to make it a gray line for now until we test it some more. If I jump in over here, same point over here, less good. And you can kind of see it's a little messier on the bottom. But yeah, you've got this convergence at almost equal. So it doesn't really give us a hint like Palantir did on when this might technically break out. But the downtrend is obvious. CapEx spending, too much of it. But from an advertising point of view, boy, they just print money. They are a money printing shop. And I think people like printing money. So I also think we're going to see more and more companies spend more money on advertising. And it's not just, I mean, we just did some earnings in the course member live stream. It's not, and found exactly this, but it's not just going to be the frontier labs that end up spending more money on advertising, but it's going to be the various different companies that say, hey, we've got these really great, you know, AI enhanced products. Well, now you got to sell them to someone. You got to pitch it, you know? I mean, like, you could have the best, for example, real estate deal finding software in the world, but what good does it do you if nobody knows about it? So you need somebody to pitch it. Yeah. So with that, if you haven't gone to meetreinvest.com to lock in your lifetime access yet, we're getting rid of the lifetime access, and that's going to be somewhere between $100 to $200 a month. And so I think the payback period will actually be pretty good. to lock in that housing AI, even if you're not thinking about buying a house right now, but lock it in for life into the future. I think now's the time to do that over it. That's the Homes AI, meetreinvest.com. We got the same coupon J-Hole over there as well. Unless you're a course member, then you can email us for a bundle code. Okay, that's at Kevin@meetkevin.com. All right, so what do we got here? Iran and Oman agreed to share Strait of Hormuz fees. This is what Trump was originally kind of pissed about, but lately what's happening is you're getting Trump kind of softening a lot on Iran. So let's see here. Okay, and also this feels a little laggy, so a lot of oil is pouring out of Hormuz. He's literally yapping right now. Let me see if I can make this a little less laggy. Okay, so yeah, 10 billion barrels of oil left Hormuz yesterday. The Strait of Hormuz is functioning. I mean, it's say anything Donald to get the oil markets to react. It was the same thing, frankly, during the campaign, you know, say anything Donald, which that's not meant to be offensive. It's just meant to be realistic that, like, yeah, that's how he got elected. It was actually kind of brilliant. He did so many rallies that he was really able to identify what resonated with people and what would do well. And as a result of that, he was really polished when it came time to run, you know, against, well, it wasn't really much of a campaign to run against, you know, Biden 2.0 there. So, but yeah, he was really able to, and you got to give him credit for how many rallies the guy did. I mean, that's what polished him up really well. He knew exactly what would resonate with people, with how they would react at rallies. That makes sense. But anyway, let's write this down. So on Iran, I think the biggest note for today is that, let's make this a green check. This is Marco Rubio is reportedly via Axios telling people that there will be no strikes on Iran for the foreseeable future, presumably unless defensive, right? Like, you know, hey, they're about to shoot rockets at us. We're going to blow them to smithereens. Those are our defensive missiles, right? But these strategic target attacks, that's what they're trying to minimize. We'll go look at the Axios piece in just a moment. But that's coming at the same time. At the same time, Trump is yapping about how great Hormuz is functioning. So, first of all, he's saying something may come out of CIA director visit to Russia. Okay? You can literally see that right here on the wire service, right there, breaking. Trump says something may come out of CIA director visit to Russia. That's kind of that bullishness that I talked about yesterday, which is, I think, very optimistic. Remember, you can get this. You just download the Meet Kevin app. Okay, so that's good. I'm personally optimistic about that as well. I know a lot of people were not very optimistic about the Russia visit, but following what happened with Cuba, I personally am. Okay, let's keep going with this. We've got 10 million barrels of oil left Hormuz yesterday. Strait of Hormuz is functioning. Then we've got a lot of oil is pouring out. Is pouring out of Hormuz. This is literally a campaign before the campaign. This is, we're gonna write that down. This is literally a campaign to lower oil prices before midterms. That's it. And it's fine. They're politicians. Like, we get it. They're gonna say whatever they have to do to get this. Aww. Darn. What I just wrote just disappeared. It's all right. Well, screw it then. So that's annoying. I really dislike it when that happens. No problem. No problem. So we'll get the bell in just a moment, but let's go look at what's going on with oil prices. And we've got, oil prices have come down. We're down off of the $94 that we hovered into last week. Last week we were at $94 in anticipation that we are going to get some kind of economic D-Day against Iran, which honestly ended up being a giant freaking nothing burger. Total nothing burger. So, maybe not highly surprising that right before midterms. I mean, what are we away from 6? How many days until midterms? Days until midterms. So we are 70 days away. All right. 69 days away. I'm sorry. 69 days away from midterms. So this is actually fantastic because now Trump is going to go bullish. So we should honestly write down some reasons to be bullish here. Maybe after the bell we'll do that. That also reminds me, Citadel has a reasons to be bullish piece out. They had that out last week. Sometimes I wonder, the timing of their things are a little odd. But we'll go through this. It is time for a thread. 10 reasons to be bullish on the market. So we'll go through that after the bell. That'll be fun. So yeah. All right, let's listen in over here. Let's get our bell cooking.
No, it's all possible. We'll talk about this more later, but looking into that hugging face hack, and the Times has done some good work on it, it's extraordinary what those agents did and how they coordinated with each other to do things they were not supposed to do. Amazing.
They have kind of a secret brotherhood.
Yes.
It does seem like that. Now, look, there's no doubt it's just they're ahead of the union. I mean, I think that's some of what was the Bill Gates manifesto. I just think that everyone's kind of aware of that and hoping it doesn't happen, but that's not really hoping it doesn't happen.
We're going to get to Gates' essay in a bit. Let's get the opening bell here at the big board on Wall Street. It's Optimal Tax Asset Management, celebrating the official launch of its new Optimal Tax Managed Equity ETF, OTAX. At the NASDAQ in Times Square is Frequency Electronics, a provider of timing and frequency products for aerospace, defense, and telecom. And it's SIBO in Chicago. It is the SIBO floor operations team. Jim is mild open here as we got, I think, volume on the SPY yesterday was the lowest since February of last year.
Cool. All right, there's our bell. So let's see how things evolve now. The 69 days here to midterms. Meta settles their class action. And now what I'd like to say is Meta's reaction. It's selling off a little bit of that juice that it got in the pre-market. Still up 3%. Qs are actually trying to pop. We have a ceiling line today at 715. A little bit of red on some of the ones that were bouncing yesterday. You can see Tesla just lost 347. Getting a little bit more red today, leading into NVIDIA earnings. Today is the big catalyst day. The numbers we got this morning, 6 of one, half dozen of the other in terms of some of the PCE and sales numbers. I don't think anything really super meaningful there. I am a little bit surprised DIX could not get a bounce after yesterday's 30% decline. It's down now another 2.5. Although it is just the first minute of the day, so it's kind of early. You've got Palantir seeing a 1.7-ish% decline right here. Bloom Energy still pushing following the Nancy Pelosi disclosure. I mean, really, from Nancy Pelosi disclosure to here, 222 divided by 185, it's up about 20%. Now, she's probably in it for about 200, so maybe, her position's up about 10%. But, yeah, I mean, this has really created some momentum and enthusiasm in Bloom Energy. We did a nice breakdown on the Bloom Energy situation. Nice to see Intuit recovering here at open. Intuit has... Intuit's a really interesting sort of, I call it like this mixed bag almost, where it's like part of the business is getting damaged by artificial intelligence, like the cheaper free user that wants the cheap tax filing help, whatever. And then the other part of the business that really makes Intuit good money and great margins, and I think will actually increase their margins over time, that side of the business, oh my gosh, that is growing because of AI. And their AI is getting better. I kind of make this argument too, man. I use a lot of what we learn and discover as we're working our own artificial intelligence to criticize or understand or research other companies. Maybe criticize wouldn't be the right word, but to understand other companies. And I think there's an opportunity there to say, oh, well, I get it. Every day that goes by, your AI is the worst that it's ever going to be. It's just going to get better going forward. And that to me is very exciting. Okay, so let's see what else. Okay, yeah, we got that. Okay, that's fine. Yes. Okay, good. Is that actually, can I make this thing work? Oh, it's funny. I don't actually think I can use... It'd be so nice if I could, but I don't actually think I can use dictation while, I guess, I'm live streaming. That would be nice, because then I could write, like, those geopolitical notes without getting sandbagged again, where the window just closes on me. But anyway, let's go take a look at yields. So we know oil's coming down with Trump's yapping. Yields are... let's see here. So, still stuck at 466. Then if I jump into here, I go to 2-year, I'm at 422. Okay, so we're up a little bit. You know, we're definitely up a little bit. Let's go. Oh, here's some more details are coming in on the Meta piece. Meta to pay states $12.7 billion, 5.3 contingent on conditions. Oh, there's a lot coming through on this. All right, let's write down the Meta settlement here. Meta settlement. Okay. Oh boy. Okay, so it says guidance remains unchanged. We've got CAAG, other company, lawsuits against other social media companies will be settled too. Will be settled on similar terms if they, it says here, if they set daily time limits for teen users to 1 hour. Interesting. That feels a little like California's parenting. You know what I mean? It's like, isn't that the job of a parent? But whatever. Meta settlement includes default nighttime block between midnight and 6 a.m. for users under 18. Oh, can be lifted by parent. See, I'm okay with that. That's okay. Default protection and a modifiable by parent, great. I'm okay with that. Right? Because then you're defaulting to protection, but you can kind of adjust it. That I'm okay with. I think that's reasonable. We got here Meta to pay states $12.7 billion, 5.3 billion contingent upon conditions. Okay, so it would be nice to have a little bit more color on this. Apply teen protections on Instagram and Facebook for 10 years. Instagram, Facebook protections for teens for 10 years. Okay. Then I've got, let's see here. California proposed settlement requires option for users under 18 to have a non-personalized feed. They urge TikTok and YouTube to join for these teen standards. Okay, got it. So they want TikTok and YouTube to join. It's not bad. I thought it was going to be a lot more aggressive. These are actually, and I can't believe I'm saying it, but this sounds relatively reasoned. Coming from the state of California, that's crazy. Actually sounds reasonable. Yeah. Okay. Okay. So, what else is coming through? We've got independent auditors to review Meta compliance for 5 years. Auditors to review Meta compliance for 5 years. That's not a big deal. That's a nothing burger. Here, I'm gonna make sure I save so I don't get kicked out again. Nobody likes getting kicked out. All right. Okay. Meta settlement requires court approval. I mean, that'll come. Meta will disable teen users from seeing number of likes or reactions. Oh, that's interesting. Meta will disable teen users from seeing likes or reactions. Interesting. Settlement requires Meta additional tools for parents, extra tools for parents. That's fine. $2.2 billion is going to California. And they got to pay for the Newsom expenses to California. Supposedly resolves, it says it resolves all state claims in federal and state courts across country. So, and that's pretty big. Let me see what else I could read on this. This is, yes, judge must sign the agreement. We know that. That's fine. Let me see if I missed anything. Meta's agreed to pay 16.7. I'm getting miscellaneous numbers here. 16.7 to $17 billion in total to settle. This brought by a coalition of 51 attorneys brought this lawsuit. Wow. Okay, so I didn't know that. 51 attorneys brought the case across the United States. So this really was everywhere across U.S. Oh my gosh. Okay. $10 billion legal expense in Q3 related to agreement. Okay, but that's fine because that includes the settlement number. I thought for a moment we were talking about $10 billion in attorney fees, and I'm like, there's no way. Okay, accused of Meta deliberately designing Facebook to addict to... okay. Hook, hold, harvest, and hide was the goal. They compared it to the tobacco industry. The restrictions on how much time youths can scroll. Oh, that's interesting. It's probably, and it sounds like they're adjustable. So let's write that down here. Also, restrictions on how long you can scroll. So I wonder if that would only apply to like YouTube Shorts versus like long form content, right? 10 billion in Q3 is a significant charge because prior estimates, let's see, had ranged from single digits to 3.5 billion. Yeah, but there was talk about $1 trillion, right? The settlement doesn't resolve all of the teen litigation. Here we go, finally a note on this. This resolves the 29 AG. What remains? Thousands of individual class action lawsuits. So there's still other like individual plaintiff claims going on. Okay, so this resolves the state lawsuits. So, resolves state lawsuits, not individual private party lawsuits against Meta for claims. I don't think any of this is bad, though. So then we have a Meta subject to injunction, barring false and misleading or deceptive statements around safety features. Yeah, okay, that's fine. Somebody has to decide what's false and misleading, though. So it doesn't mean much. Okay, good. Then let's go to the reasons to be bullish. So let's look at this piece. Okay, so we're gonna go in over here. Okay, I'm gonna add to this, and we're gonna call it what's it called? We're gonna call it number 11. Okay, so number 0 reason, Trump wants to pump it up. You've got to pump it up. Trump wants to pump it up before midterms. It has been a minute since we've actually listened to some pump it up. Do we have? I don't think I actually have pump it up right now. I don't think I actually ever had it as a soundboard. I need to make that as a soundboard. But for now, we'll just have to go a little old school with it. There we go. All right. This is how we do research. Yeah. Trump wants to pump it up before midterms. That's right. Okay, pump it up. We are 69 days away from midterms. And what does that mean, 69 days away from midterms? It means we got to get the oil down. The oil, we got to get it flowing. We got to get it flowing out of every place. It's flowing from everywhere. We want it flowing. We want the flow. And then in addition to that, Scotty, we need lower yields. Scotty, you failed. I'll stop bombing Iran to get yields down then. Obviously, Trump needs to have some kind of victory coming out of this Iran failure before midterms. We got 69 days to do that, so I expect some more bullishness coming here. But let's look at what Citadel has to say for us. But wait a minute, what is that? What is that? Oh yeah, it's the pump it up music. Okay, so earnings better than feared. Q2 is tracking to one of the largest beats on record, with the S&P 500 growth running at about 33%. Strongest pace outside of earnings recoveries. Companies are not simply beating elevated expectations, they're driving the steepest earnings revisions since 2000. So basically, I ended up writing that the AI cycle of spending is lifting all ships. It's not just this, to me, it's more than we're going to buy, AI chatbot subscriptions. To me, it's much more. It's companies saying, hey, we're going to invest in our own in-house AI systems. This is enterprise AI, where we send nothing to the cloud. Right, like somebody left me a comment on this yesterday. Let me go see if I can find it, because it was very, I think, relevant. So it was, let's see, search. No, I'm gonna find it. Find it. Anyway, so it was last night. I replied to it, and I gave a nice little breakdown. Oh yeah, here. Would love a video on why you need to buy your own chips versus just buy compute. Okay, so this is really important. Let's put the reply in here, because the reply, again, it's not me to just talk about myself. It's me going, this is probably what's happening at other companies as well. And so when you look at it from that lens, when we're sharing ideas here, the goal is to say, other companies probably are experiencing that as well. So, for example, this person, Let's Do Work, says, I would love a video on why you need to buy your own chips versus just buy compute. It's obvious it makes no sense for you to run your own chips and a mini data center. And the response to this is, why would it make no sense? They've doubled in value. They've paid for themselves. We keep our own data, and we're able to be much more flexible, right? So this is exactly the same argument every enterprise in America can make. That means we're not just caring about the GB300 and Vera Rubin spending at NVIDIA. We're looking at every single corporation in the country saying we can optimize our business by, investing into our own chips. What does that do? Think about that. If you buy your own chips, chip expenses like 5090s go on the balance sheet, okay? If you go buy compute, or lease it, it goes into cost of goods sold. So it's a P&L money loser, hurts EPS, right? And that's not like the core, like we don't care about that because it's so nominal, like what we've spent on chips. But like big companies do. A big company cares. So it could even be the RTX 6000s, right? You like, they're not expenses actually if you're buying them on the balance sheet because you're taking cash and you're turning it into a different asset. It's a chip. So now all of a sudden it's a plant property and equipment, investment rather than a P&L EPS herder. Herder, that's a new word. Plus, they're very easy to justify when the values of them keep going up. That's not going to last forever. Very easy to justify as values go up. That won't happen forever, obviously. Like they'll come back down. Keeping your own data off Claude or OpenAI, who are literally companies trying to replace software companies, is kind of useful. OpenWeight enables that. And that's why Jensen's getting into OpenWeight. And you have much more flexibility. Much more flexibility. Why do I need to rent? Why rent, a 256 gigabyte VRAM chip if a 32 or 96 GB VRAM chip will do? I don't need the extra headroom. It's wasted utilization. And renting some of these big chips or the small chips at scale just doesn't work. So you stick them in your own server racks. You plug them into a 240 volt, outlet. So this is what you do. You take your 5090s, take your RTX 6000s, your Blackwells, plug them into a 240 volt, 30 amp circuit. Boom. You can literally run twice the machinery you could on a 120 volt circuit, and maximize your equipment install. In diversified locations. It's amazing what you could do with your own products. And so that really goes to this. That really, in my opinion, speaks to this, which is everything's going up. All right? So, okay, let's keep going here. So then we've got, this is a chart of sort of historical earnings revisions. All this fat right here, all this extra above the average that I just sort of highlighted there. This extra above average IMO is AI investment by companies across the board. Let me see if there's any other news here. California Attorney General proposed settlement requires Meta to block notification. Wow. Blocking notifications as well. I mean, that's not also a terrible idea, honestly. I mean, the kids are going to school, right? They don't want to get woken up by a notification. I mean, everybody should honestly have their own, like, do not disturbs and sleep settings on. Like, if you're getting woken up by stupid notifications, I mean, at this point, we all know you could customize how the notifications, like, either summary show up or when they bother you or when they don't, right? But that's interesting. Also requires no notifications between 10 to 7 a.m. Okay. And, okay. Let's save that. Come on. I'm gonna move that update button. All right, there we go. So, let's go back to the bull piece. All right, that's that. Okay, so the next piece that we have, this is all still about earnings. Valuation, earnings are doing the work. S&P 500 is making all-time highs while forward multiple is falling. Earnings estimates are rising. And this is, of course, a fear that's built in. This is my thesis as to why we are getting some compression is this idea of, like, how much longer can the growth last, hence some declining pegs, right? You know, people do get nervous about this time is different. Even if true, people get nervous about this is very different, right? Okay. So far earnings, not multiple expansion, doing the heavy lifting. That's fine. Forward PE on the NASDAQ. I mean, yeah, look at that. We're not quite at 22 lows. But we're you know, definitely on the lower side of NASDAQ valuation. So this was, wow, this got all the way down to almost 18. So we are definitely in the cheap bucket. Cheaper bucket based on earnings. The bottom half. Bottom half of valuations. Why? Nervousness? Who knows? Okay, but that's one of the reasons to be bullish. Leverage, the reset looks increasingly mature. Basically, the leverage folks got liquidated. Right? That's one of their reasons. So they say, AKA, they got liquidated. You know, or I should say some. Some got liquidated. Okay. This is a reduction in leverage chart over here. The buyers are back. Retail has turned into a net buyer last week, reversing the selling at the end of June. Cash equity capitulation impulse has faded and participation is rebuilding. Okay. Retail has returned to a net buyer. Got it. Yay. You could see retail sold. This was the most intense part of Iran war. That, I don't think they have the tariff debacle on here, but you could see that was the last time retail was selling compared to the end of July. And this was Leo Fold right here. Leo Fold. Okay. Leo Fold. Okay. Retail's most bought names. Retail's most bought by May, June. Semiconductor. Average daily net notional. Okay, retail's most bought names in May and June. Semiconductors and memory. Yeah, in other words, coming back to semiconductors and memory to some extent. You know, but NVIDIA has been struggling. In fairness, I wasn't sharing the screen. Sorry. NVIDIA has been struggling a little bit in fairness. So this just shows you the semiconductor and memory chart. Okay, let's keep going here. Retail is buying the market again, but still paying for protection. Markets can move quickly from caution to participation. This is the call put direction. 1 week look back. Fine. Okay, so that's retail. Then we have bullish reason number 5. Passive flows, the bid never left. It sounds like AI wrote that. Household portfolio allocations have driven approximately 1.6 trillion of year-to-date inflows, or about $7.5 billion a day. Wow. July alone saw 350 billion of inflows, largest monthly total on record. So people are just still plowing money into the markets. Money is still getting plowed in. Okay. Buybacks, $1 trillion comes back online. Right, this is the buyback window. And this was, we're about here. We are here. So we are right about. Probably get more buybacks right after NVIDIA. We're here-ish. Okay. 70% of the largest authorized buybacks year to date are outside of tech. Yeah, that's fair. Buyback authorizations. The S&P 500 is not the market. S&P 500 is not the average stock. Underneath the index, outcomes have been binary. Factor rotations have been violent. Yep. S&P keeps going higher. So basically, everything is getting squeezed as IT is growing, which is bad in a crash because it means even the S&P 500 is at risk, right? Which, nobody wants to believe that the S&P 500 can decline, 80% or whatever. That just sounds insane. It'd be like the Great Depression. Yeah, but it can happen. So, no one wants to believe in a recession, depression. S&P 500 can actually meaningfully rotate down. But this chart is useful. Why? Because it shows the increasing concentration of tech in the S&P 500 and everything else getting squeezed. Right? 37% tech now. You do tech and financials, you're at 49%. Equals 49%. Which, what's interesting about that is if tech crashes, financials, at least brokers, trading, will likely suffer too. And IPOs, which is often what you see with banks, which hurts banks and investment banks. Hurts banks and investment banks, which investment banks aren't banks, but you get the idea. Different branches. Let's just make this a little smaller so we can actually read this crap. There we go. Okay, cool. Dispersion, breadth up, correlation down, so spreading out of the money. The average stock is starting to look healthier. That's fair. 200-day moving average, 70% above the 200-day moving average. I love buying stuff when it's under its 200-day moving average. Just gotta find. I wonder if Netflix right now is under its 200, or Meta, probably under 100. But I don't know. Are they under their 200? Yeah. Look at that. So the 200-day moving average is 622 for Meta. So you could actually get Meta under its 200-day moving average right now. That's an interesting note. I'm gonna write that down. Let's write down some stocks you can get under the 200-day moving average. So under 200 DMA, you've got Meta. I'm going to guess Netflix, but let's find out. Let's get some more in here. Netflix. Netflix is under its 200-day moving average. I've got... What's another one? I wonder where NVIDIA sits. NVIDIA sits right... 195 is the 200-day. That we've actually got lines right there at 195. So Netflix was. Meta was. We know that. Palantir is going to be way above it. How about Salesforce or ServiceNow? No, they're above it. CRM. 200-day moving average is 199. It's basically right there, you know. So ServiceNow and Salesforce, we'll say, are close. So Netflix, ServiceNow, CRM are close. What about UiPath? Or like even the mortgage plays, like a Rocket Mortgage, right? Rocket Mortgage is under its 200-day. UiPath. UiPath is over its 200-day, so not that one. So Rocket Mortgage. Hood's going to be over. Amazon's going to be over. Ooh. Yeah, oh no, sorry. Memory is over. Cybersecurity is way over. We know that. AppLovin. Yeah, AppLovin's well under. All right, well, some examples of some, I guess, that are under the 200-day. Okay. Let's write that down. That's just another example. Okay. Okay. All right, what else we got? Then we've got volatility. Below 15 changes the math. Hold on. What are we talking about here? So this is the moving average correlation, opportunity set for single stock, alpha is expanding, fine, volatility. Okay, below 15 changes the math. Low volatility, normally viewed as consequence of higher equities, but 30-day and 60-day realized volatility resets lower. Low volatility itself creates additional capacity. Average 3-month vol across the 10 largest stocks constituents has fallen 20 points. So basically, volatility is tanking. Average. Yeah, this is the tanking that you're seeing, at least in semiconductor stocks. Okay, so AKA, if vol is lower, people take on more risk, or people might, I should say. That's one of the reasons why they sort of argue this bullishness, if you will. Okay, and then hedging the right tail. So this is basically called the upside hedge. Upside hedge. Applied volatility has collapsed. Demand for upside has accelerated towards record levels. August 4th was the most active day for SPX calls. 5-day session marked the largest 5-day period in SPX call history, right after the Leo fold. Of course, they had to offload their book, so they had to be bullish. Macro risks are real. Balance of flow is shifting to a more constructive direction. Earnings is supporting prices rather than multiples doing all the work. Leverage risk, the reset is mature. Retail's buying, breadth is improving. Yeah, not every signal is bullish. What matters is more of them are now reinforcing one another. This is how a market that spent much of the year absorbing selling pressure can begin to rebuild buying capacity. Yeah, that's not bad. It's an interesting piece. Very interesting. Okay, good. So, where do we sit now? Let's go find out. We should... the Q's just edged into green. Look at that. Edged in, baby. Edged in. Let's go look at the Meta numbers. So if we go look at the financials for Meta, that should be fun. Meta earnings. Yes! Let's see what we got. Meta. Let's see here. I got AMD. I got SpaceX. The search function on Apple leaves something to be desired. I wish I could just have it like, can you just search the title name, like the file names, instead of searching everything? Whatever. should be a little switch that's just obvious. Search titles only. Worst case scenario, I'll just pull it up again. But, oh, you know what? Rather than looking at the Apple files, why don't I just go jump into app.meetkevin.com. Let's just go to the Stonk tab and find it from there. Stonk AI, Meta. Okay, Meta platforms. Here we go. All right, here's Meta. Got a forecast on it of over $1,000. So I think it would actually honestly be a little bit on the low side. So let's go see, where are some financials? Here we go. Here's some financials. So I've got net income up 22%, stock comp up 52%, which is a little elevated. Free cash flow was $15 billion in 6 months. So $15 billion in 6 months is about 30 per year, which puts its yield at about a 2% cash flow yield. You know, nowhere as high as some of the software plays. Okay, then we got some debts. Okay, here we go, revenue. So their expenses actually really jumped in this last quarter. And that hit their margin, which reduced, you know, some of their forward pricing potential, which our AI tool picked up on right away. That, okay, well, hey, margin's coming down, then that's going to lower the price target a little bit. So COGS up 33%, which does shrink their pricing power a little bit, and SG&A and R&D nearly doubled. So you've definitely got more expenses. Now you've got the litigation expenses coming up. You know, Mark Zuck is really good at spending money. The upside, or the upshot, I should say, is let's write down what we think for the forecast valuation they have. So forecast valuation. Let's write it down right here. Okay, so let's see what we've got. OpenAI leaders believe they're on the cusp of AGI. Yeah, I've heard that a million times before. They were on the cusp with GPT-3. Oh, they were on the cusp in 2018. Guys, it's sentient. It's sentient. Oh my gosh. It has a personality. Which is nonsense. Okay. So, forecast valuation. Market consensus is 35.20 EPS end of year. That puts us at future growth expectations. Growth expectations of 8.8, 29.9, 14.91, 15.49 equals, will probably work out to about 15%. 60.9, yeah, it's literally 15%. 60.19 divided by 4, it is 1504. 1504 average growth expected. Okay. Average growth expected of 1504. Price to earnings. What do we sit at? 569 divided by 35.2. 16.16 PE ratio at a 1504 growth expectations. That puts me at a PEG ratio of 7.4%. Or sorry, what am I doing? 16.16 divided by 15.04. 1.07. 1.07 PEG. I sit at about 35% net. At 35% net, we're around Apple margins. That puts us at, what, maybe a, let's see here, maybe a 2.4? 2.4 times 2.4 times 15.04 times 35.2. Yeah, 1270, right? 1270 at a 2.4 peg. Risk is those declining margins on OPEX we're seeing. And so, you know, if you ran this at a 2 peg, it puts you closer to 1,000. Put it at a 2.1 peg, puts you around 2.1 at 1504 times 35.2. It's maybe about 1,100. It was pretty close to where our algo is sending us. So that gives us a little bit of color on Meta, I think, valuation-wise as well. There's good upside there. I mean, for a company as big as Meta, especially with some of the litigation risk behind, there's some good upside there. The near term, we still have to deal with NVIDIA coming up. You know, well, that's going to be up in actually pretty soon, I don't know, like 6 hours. Wow. They've been on the cusp of AGI since FSD was a year off of being ready. Yes. Yes, exactly. Full self-driving is only unsupervised is only 1 year away. Confident it'll be the end of the year. And then it's not. Okay. So, the other thing to note with Meta is if we go look at their last earnings sets, we saw that they softened a little bit on ad growth. Let me see where it was. Ad impressions were up 14%. And ad pricing was up 12%. So it did feel like a little bit of softness there in pricing, because often, I should say historically, we've seen that ad pricing really pick up. So you definitely had a little bit of a bump there in the last quarter, a bit of a weakening PP. You know, will it smooth out? To be determined, I guess. On Meta. Okay, good. Let's now see what else there is. Okay, let's go take a look at yields. Go take a look at El Market Day. Yeah, of course, Meta and the Nostradamus of AI are on the front page of the Wall Street Journal. That's great. Okay. Fed chairman's heading to Jackson without a clear stance on inflation. Yeah, that's going to be really interesting. Okay, so we saw this. Let's see if there's anything else new in this. Sweeping changes. We talked about that. Meta will pay out only 70% of the settlement unless TikTok and YouTube also agree. Oh, interesting. Meta will only pay the remaining 30% if the other two companies agree. Oh, that's interesting. That is extra intel right there. So in other words, they're trying to set the standard to clean up the whole to fully settle here. And set the standard for the other social media companies as well. Interesting. Okay. Let's see. Settlement. Halts the trial that was going on. Blah, blah, blah. Taking place in Oakland, California. Oh, man. Thousands of lawsuits been filed by school districts and individual plaintiffs alleging social media harm, the design of the product. All right. Let's go look at yields and bonds. 2-year, 422 going into J-hole. J-hole, coupon expiration on Friday. Oh, yeah, remember, email us if you want. Course members get a little extra. They get a bundle code for it. But we are getting rid of the lifetime access for the Homes AI. So if you want to get in before the lifetime access for this is gone, it's going to end up being somewhere between $100 to $200 a month. I think that, you know, the break even on this is a really good value. So I would consider that before the lifetime access goes away. That's meetreinvest.com. Okay. Bonds, oil, 10-year, 466, not really going anywhere. Oil, it popped up again a little bit. We were at 46 there for a moment on some of Donald Trump's commentary. All right, let's go to the info. Let's see what we got here. DeepSeek revenue reaches $70 million as of July. Tenfold jump from 2025. 70 million, boy, it just shows you, though, the open weight model is a fraction as profitable as OpenAI and Anthropic. At least revenue-wise. Bill Gates warns that AI will cause massive unemployment without intervention. The misinformation. You sound like an Elon fan there, liking indicators. That is a good line. I like that, though. That's funny. Bill Gates issued a dire warning Tuesday that AI will lead to widespread unemployment in a nearly 6,000-word essay published late Tuesday night. Even under the best circumstances, the transition to the new AI era will be one of the most turbulent times in human history. Jeez. Predicting that AI will soon overcome... Well, I want to see it. Where's this 6,000-word essay? Let's see if we can find it. Bill Gates, 6,000-word essay. The turbulent AI era is here. Gates notes. Oh, okay, here we go. Okay. Oh, man. That's fine. It's not actually as long as I thought. All right, let me turn that into a PDF. And then once we turn it into a PDF, although the website doesn't really let me easily print this, why does the bar scroll like that? That just looks crappy. Like, I get it if it attaches to the top, but it doesn't here. Come on, Bill Gates. We need a better website, man. You know what often works well? Not always. But you get the reader function in Safari. So we pull up Safari. Is Bill Gates' essay MLA format double-spaced? He's using the Chicago Manual of Style. All right, show reader. Oh, yeah, that's so much cleaner. Look at that. Oh, that's clean. Oh, that's so much nicer. Oh, that's good. I like that. Okay. All right, I'll save that. Save as PDF. Bill Gates AI warning essay. 826. Okay. Let's see. Now we have a PDF of this. We can get some bookmarks cooking in here. That's going to be fun. Take another sip of coffee, and then we're going to go through some of this. Let me make sure this is still cooking. What's going on here? Okay. Oh, there we go. Refresh that. Okay, perfect. U.S. issues Russia-related general license on authorizing transactions related to the imports of certain prohibited diamonds. That's weird. Russia-related general license. That's interesting. I don't really know what that means. We'll have to look at that. We'll come back to that. Okay, so let's go look at the highlights. So let's use bookmarks. I have a tendency of starting at the bottom of the bookmarks. As I mentioned, these are my footnotes. This There are footnotes to my optimism. Although the innovation pipeline sets us up for long-term success, the trajectory of progress hinges on how the world addresses 3 key questions. Will a world that is getting richer increase generosity to those in need? Basically, a pitch of philanthropy. Okay, got it. Nice. I'm going to highlight those. What do they call those things? AI clues. We'll highlight those. Okay, so that's boring. Ability to anticipate our problems, therefore, new discoveries will make us all better. The second, care for each other throughout history. You can always find stories of people tending not just to themselves or their clan, but to their country and to the greater good. Those 2 qualities, foresight and care, are what give me hope. Foresight and care. I'm glad you're hopeful. We're already starting to see the impact of AI on the jobs market. I think this impact will grow over the next 5 years. Even if the transition takes longer than I expect, we should use 2026 to prepare ourselves for these changes, including which policies might help best spread wealth. Different political parties will suggest different approaches. Okay, that's boring. Turning to aid budgets for poor countries, I'm worried about number 1, if funding for healthcare decreases by 20%, 12 million more children die by 2045. Right, this is basically a frustration over Trump basically dismantling USAID and cutting other such funding, which whose name has really been dragged through the mud. Okay, by his camp. Still have a lot of innovation and scaling to do. Industrial emissions, government policies in rich countries. If we don't limit climate change, it will join poverty, and infectious disease will cause enormous suffering. So this is the climate argument. I'm still a big fan of solar and wind. I'm still a big fan of solar, wind, nuclear, right? A huge fan. Mega fan. Like, we'll put in some more solar panels soon. Okay. Where's the complaint about the jobs market? I'm still an optimist, but these days my optimism comes with footnotes. Next 5 years will be difficult as we try to get back to work with scaling of life-saving tools. Next decade, the key innovation. HIV used to be a death sentence. Today, you could expect to live as long as somebody without the virus. Budget cuts. Limit life-saving tools. Breakthroughs are a bell that cannot be unrung. Preventable diseases. World gets richer. Okay, near-term difficulty. The next 5 years will be difficult as we get back on track. I remain optimistic about the long time. I believe within the next decade, we will not only get the world back on track, but enter a new era of unprecedented progress. Basically, to me, it sounds like he's saying Trump delayed us, but he's hopeful. Like, that's kind of what I'm gathering here, just sort of like on the notes about green energy and aid and such. But he's optimistic, essentially, that we'll get through it. So it sounds like he doesn't really like Trump that much. The world went backwards. See, the world went backwards last year on key metrics of progress. The number of deaths of children under 5 years old over the last 25 years. Deaths went down faster at any point in history. But in 2025, deaths went up for the first time. Yeah. Okay. So what else? We've got 3, 4... Where's the unemployment part? Emissions. Healthcare via AI. This is huge, by the way. Like cancer drugs and that with AI. Big fan. I already use AI to better understand my own health. Imagine what's possible if it becomes available for every patient and every provider. Right? Okay. Where's the part about jobs? Oh, here it is. Job market. When people in the AI space predict AGI or fully humanoid robots will come soon, and then those deadlines are missed, it creates the impression that those things will never happen. Fair. However, there is no upper limit on how intelligent AIs or good robots can get. Well, regarding the robots, I agree with that. I believe the advances will not plateau before exceeding human levels. That's okay. Okay, that's bullish AI, right? Actually, quite bullish AI by Gates below suggests we plateau after exceeding human capability. I believe that on robotics, but I think robotics to me are probably a 2040 play. Like next recession, all in robotics. That's my take. Like you pick the freaking bottom on robots and nuclear. Next recession. IMO. Okay, my opinion. Don't sue me, bro.
Don't sue me, bro.
I love it when the Halo guy comes in. Yeah. Next thing, he's gonna tell me to go buy the dip.
Buy the dip.
All right. AI will change society most. When people in AI predict age, okay, no upper limit. Two biggest challenge are the use of AI by bad actors and the disruption of the job market. Okay, this cybersecurity. Big play. Big fan of cyber. And then jobs market. I gave a TED talk warning the world was not ready to handle a pandemic. Well, we printed our way out of that one, huh? Second challenge is job market disruption. AI capabilities will allow us to make far more goods and services with less labor. That's basically deflationary. Deflationary. Ironic that sunscreens cause skin cancer and now they have a cure. I think a lot of those shystery chemicals, at least from what I've been looking at, have been removed from sunscreens. Although you could also use the mineral sunscreens to try to minimize your exposure to the chemicals. Chemical sunscreens are just so nice because they actually absorb into your skin, which that's just probably the problem as to why it causes mutations. It actually absorbs, so it doesn't wash off as easily. Like you can't rub against a towel and then it washes off or comes off. Whereas like a mineral sunscreen, you rub against a towel, it comes off. So then people are using hybrids. They're like, oh yeah, we'll put some zinc in, some chemicals in, but then it's like, you really can't win. What I find is just don't burn. Like that's really important. That's my thesis. It's not medical advice, but like don't get burned. So like be aware of when the UV index is high and limit your time in the sun when the UV index is high. If the UV's 10 outside, don't be in the sun for more than 15 minutes or 10 minutes if you're super light skinned. If the UV's 2, you can be outside all you want. Anyway, but that's that. Yeah, I know. I get the jade. I do get the jade. In a mathematical sense, we should be able to allocate these new capabilities in a way that will benefit anyone. As AI delivers on its potential, we should reduce the work week or even decide there are some areas we don't want to use AI in. Okay. The disruption efforts are hard to model. Sometimes when game-changing technology improves, it drives more demand. We could reduce. We've always heard that. AI makes software developers at least twice as efficient, which makes coding cheaper while creating demand elasticity for code. Lower costs increase the overall market. Even with this complexity, the rate of improvement is starting to be enough to disrupt the job market in areas like software development. Other areas like warehouse work or phone support are not quite there yet, but as AI becomes more capable, the jobs disruption will become more immediate. Yeah, that's probably honestly what ushers in the next sort of like depression. That probably ushers in the next depression, but not yet. We still have time to pump it up. Don't you know, pump it up. Says, I'm a redhead, it takes 5 minutes in Arizona. Yeah, that's true. Because I'm pretty sure that's like isn't that like a Scottish or Irish type of skin tone? Super lacking in melanin. And so you have like no protection. You basically just have to wear, a hat and long sleeves. And then that sucks because it's hot, especially in Arizona. In the summer, I mean, it's like 100 there right now, isn't it? Anyway, yeah, so knowing your skin type is useful too. By including fitness, particularly as some readers may find continued optimism even more surprising. But as we start 2026, I remain optimistic about the days ahead because of two. Okay, so it's interesting. Like, he has a very small note about the jobs market. This actually isn't that long of a piece right here. And that's kind of what the articles ran with. Irish and German. Yep, well, there you go. So that's what they ran with. Turbulent times in human history. He warned that AI chatbots can prove addictive. Oh, I didn't see that. Wait, did I not get the full thing here? Critical areas, climate change. Critical example. And there's 6 notes of critical, and it all seems to be about climate change. So maybe they used a different thinking. That doesn't show up. Huh. I mean, I feel like I got the whole thing. All right, whatever. We'll just merge the two together. AI chatbots can prove addictive and remove people's critical thinking skills. AI will soon overcome issues like hallucinations and be capable of replacing both white-collar and blue-collar jobs at lower cost than human workers. Do we just not have the whole thing here? I feel like we do. Critical thinking. Oh, here's the lower section. Did we only get the first part? I don't know why. Or did we only get... How weird. Critical thing. Oh, it's all the way down here. It's in a totally different post on his webpage. So they're blurring together older posts on his blog. Unless he just posted a bunch of them. No, these are older. Yeah, see, that was from 2023. The risks of AI. And that's when he talks about artificial intelligence. Honestly, I think the information went in here and AI summaried his blog. When hallucinations or biases are still a problem, I wouldn't be surprised if that's what they did. They just AI'd this whole thing and they don't even realize that's from 2023. This piece, well, that was from 2023. Let's see what this one's from. No, it's in here too. I don't know why it's not in our piece then. In our print version. One preliminary, no, it is here. Okay, all right, I'll give him, that's fine. It's okay to be jaded and be wrong. Preliminary survey suggests a heavier AI use was associated with less critical thinking. The effect was stronger for younger people. This would be the worst possible time for humans to lose their critical thinking in the era of deep fakes and misinformation. That's a fair point. That is indeed a fair point. Okay, what else do we have here? I agree with that. Stark warning from... Oh, that's all. That's their summary of it? All right. Yeah, that's pretty much their summary. Interesting. Okay, let's take a look at this DeepSeek piece here. Let's see here. DeepSeek. Cody, Stryker, and Intuitive Surgical are big healthcare software companies. Stryker's massive. Oh, we'll have to check into them. But right now we are going to look at that DeepSeek piece. Yeah, we're going to be looking at a lot of healthcare stocks over the next few weeks, more than we already have been, especially since we just did a little bit of shopping in stonks. If you haven't gotten the trade alert yet, make sure you're part of the Meet Kevin membership. You get lifetime access to those trades, so you can go trade in 5 years. You hear about it. But join that at meetkevin.com. But yeah, we'll be looking at a lot more healthcare names as well. The intersection of AI and healthcare is going to be a big next frontier. Really excited about it. DeepSeek generated about $70 million in revenue in the first 7 months of the year. See, that's low. It actually shows you how low, compared to $65 billion of ARR for Claude. These open weight model companies aren't actually making that much money. I wonder if there's a comparison of usage between the two. Let me see if I can get a DeepSeek usage piece or something. Open. Okay, so in the meantime, let's look at this. DeepSeek recorded a net loss of 750 million yuan compared to more in the prior period of time. The company is having ongoing discussions with investors about a funding round. DeepSeek didn't immediately respond. While DeepSeek revenue is still minuscule compared to U.S. companies such as OpenAI, yeah, exactly. The company is achieving a healthy gross profit margin. These gross profit numbers, I feel like, are always just such a lie, though. Gross margin was 44.6%. Yeah, but I don't know if they're doing the same thing that Anthropic is doing, where they're hiding their, what's it called? Training costs. We don't really have usage data for DeepSeek. That's unfortunate. Okay. Revenue and other numbers haven't been previously reported, show an accelerated pace in the last few months. DeepSeek's annualized revenue had reached almost $500 million on an annualized basis. Funding talks could help give it a boost. DeepSeek is recently taking steps to further increase its AI revs. Earlier this month, the company increased API prices. But even after the price hike, DeepSeek's models are still cheaper than popular Chinese and American models. Kimi 3 charges $15 per output. Opus 5 costs $25 per output. DeepSeek's expenses are growing fast. AI infrastructure related, blah, blah, blah. Yeah, all right. But to me, I mean, obviously there's a usage question. But it shows you, frankly, the open weight side is not going to be very profitable. And this is, I think, why Anthropic and OpenAI aren't going to want to compete in the open AI or in the open weight space. Because frankly, if they do, they would just self-cannibalize, which is dumb. You don't want to do that. Anyway. All right, what we got cooking over here? Meta's barely green after some enthusiasm yesterday. Nvidia's down 1%. I've got, obviously, there's that. Oh, there we go. There's that Dick's bounce. I was going to say, like, how are you going down again? You just went down 30%. It's like there should be some kind of a bounce there, right? Oh, Bloom actually went down. Some of that trade momentum has exited. Some of the momentum into Bitcoin after rejecting 80, it got to 81, has accelerated down to now 78 again. A lot of red. A lot of red in the market today. Yeah, everybody's a little nervous. You got Salesforce reporting today and NVIDIA. You got to throw the extra R in. Oh, and CrowdStrike reports today. Vive reports. HPQ. Viva. That's, if I remember right, that's the healthcare data AI software. Okta. Security Synopsys. Honestly, good set of earnings today. Yeah. Very interesting. It's going to add lots of color. Some of the greatest color we've ever seen. The greatest greens and reds will be coming. You have to say it like you're out of breath. Okay. Let's hit the Economist. Let's see what they got. Okay. As his presidency flounders, Donald Trump is more dangerous than ever. The Economist hates this guy's guts. It's hilarious. Mark Carney must be aware of an all-out trade war. His situation could escalate. Yeah. Let's look at the Carney piece. Donald Trump, first-order tariffs. He said they were needed to force Canada to stop drugs and stop migrants. He soon dropped that justification, only to spew out other grievances. Trade deficit, national security, dairy, Canadian tax, television advertisement, Canada's trade with China, and wildfire smoke. Okay. So, let's see. Trigger for the latest. Let's see. It doesn't matter. Stabilization of relations between the United States is essential to Carney's efforts to attract investment, to diversify Canada's economy away from its irrational neighbor. Okay. So in past disputes, the Prime Minister has wisely tried to play for time, avoid aggression, and make every effort to keep negotiations alive. He's repealed a tax that Mr. Trump did not like. He removed most of the retaliatory tariffs inherited from his predecessor and resisted calls to cut off energy exports to the United States. But this time, America's demands were so extreme that no prime minister could have accepted them. Well, you create a precedent, too, of like, oh, he's just going to roll over, you know, he's going to settle. Mr. Trump has said that he will slap further duties of 50% on Canadian cars. Jan 1. Canada is unusually vulnerable to an all-out trade war. About two-thirds of its exported goods are sold to the United States. Unlike Brazil, whose exports are mostly sold in spot markets, most of Canada's exports are deeply integrated into the United States supply chains. This makes it hard for Canadian firms to find alternative buyers. Canadian counter tariffs will only deepen the economic pain from the Americas. Escalation will damage the case for much-needed investment into Canada. Carney should look for ways to walk back his retaliatory tariffs. If that's unfeasible, they should at least be made as targeted and easy to reverse as possible. So The Economist is actually saying, hey, you need to bend to Trump here. Wow. Officials from both sides should bear in mind the costs they are imposing on countries through escalation. It's already clear that existing American tariffs will be hard to unwind. One of the other reasons that talks failed is protected industries in the United States lobbied the Trump administration hard against lowering tariffs. Only Mr. Trump has the power to end the illogical crusade against Canada. He's shown no inclination to do so. Mr. Carney demonstrated that a moderate response to Trump need not be ruinous. He now has 2 weeks to pull off something much harder. He needs a deal that is better for Canada than America's latest offer. Yeah. Yeah, tariffs are destructive. We know that. But Trump's got the power. The one with the gold makes the golden rule, right? That's the golden rule. The one with the gold makes the rules. I told that once to these Jehovah's that knocked on my door. And they're like, son, can we tell you about the golden rule? And I said, I already know the golden rule. The one with the gold makes all the rules. They turned around real fast. The conversation ended real quickly. Is Donald Trump becoming a lame duck? As his troubles multiply at home and abroad, the prospect of dealing with a hobbled president is enough to make foes and friends swoon with relief. For hard men who rule China, Iran, and other American adversaries, to survive Mr. Trump's maximum pressure campaign would be propaganda wins for the ages. Yeah, I believe that. You know, if China, Russia, and Iran could be like, hey, we got through the Trump cycle. Yeah. Deep down, Xi Jinping and his friends believe that all occupants of the White House are selfish, America First bullies, but some hide it better than Mr. Trump does. For the most part, many allies and partners would like to see Mr. Trump limp to the end of his presidency. That does not mean that leaders in Berlin or Tokyo or whatever are rooting for Mr. Trump to lose. The enfeebling of America would frighten allies in Europe, Asia, or the Middle East, who are at best years away from being able to defend themselves without the United States. But a fuming, friendless Mr. Trump, so weakened by his own blunders and plunging approval ratings that he retreats to the gilded fastness of his White House. There are tinker plans for his ballroom and monocle memorial arc. Okay, whatever. The vision is that many governments would cheer. Blah, blah, blah. Is there any value to any of this? Let little people worry about the Republican Party, public policy, or America's budget deficit. As long as Mr. Trump is still commander-in-chief, he can secure a place in history by remaking or breaking the world. It's a fair way to put it. Foreign governments should stop dreaming of ducks. Instead, they should study mountain gorilla. What? The silverback male. What are they talking about? Like, is this like a reference to AMC over here? What's going on? This is a weird article. When in doubt, lash out. Now the Strait of Hormuz remains closed. Much of Trump's wrath is aimed at allies and partners in Europe and Asia and the Arab world. Trump, who sees himself as an alpha male to his core, was never likely to limp quietly from office. Now that his dominance is threatened, the world will find him more disruptive than ever. Basically, they're suggesting Trump's going to lash out and cause more problems if he becomes a lame duck in midterms. That's not great. I don't know, though. I feel like, to some extent, the opposite is kind of happening at the moment. You've got, you know, this... I want to understand this Russia license thing, because Trump did imply something good would come. Well, he said something good would come out of the Russia meeting. So this is U.S. issues Russia-related general license on authorizing transactions related to imports of certain prohibited diamonds. Treasury Department. Okay, so I wonder, like, is this related to CIA Director Ratcliffe visiting Moscow, right? That would be very interesting to see. Let's make some notes here, because we've got, well, we have that on our bull piece. 10 reasons to be bullish. That's what we wrote right here. So, okay, this Treasury Department license relates to, it's basically roughly a 1-year renewal of a, you know, diamond import rule. Allows diamonds of Russian origin that left Russia before certain dates to keep flowing. So it seems pretty unrelated. I don't know that that's related at all. So that sounds, yeah, probably unrelated. Unrelated Treasury renewal. But you did have Trump also talk about, Trump says something good will come from a CIA visit to Moscow. So we'll see. Which just might be too soon. Too soon to say. All right. What else? Okay. Let's find out. Oh, they're having Salesforce and Jensen on today? Yeah. Well, they're both reporting earnings, so it does kind of make sense that they'd both show up. All right, how are we doing here? There we go. Okay, Meta's coming up again. Pump it up. Meta's pushing. Qs are almost flat. Let's go see what we got moving up. Don't you know, pump it up. Let's see here. Watch list. Okay, so the highest mover right now is actually Dix. You know, and you're not, I mean, you got Dell moving as well. Dell at 2.8. I've got Oracle at 2. Let's take a look at Dell. I mean, Dell's just been crushing. It did top out at 514, but what a freaking roller coaster. Or like rocket ship, I should say. It's not really much of a roller coaster. It's a rocket ship. But talk about extended above the moving average, huh? It's really impressive. Just on that, taking the low margin business of data center racks and just exploding a new revenue vertical, and stock's gone vertical on it. Good for them. Okay. Let's now see what the odds are of a rate hike. Okay, CME. Let's get the rate hike odds. All right, let's see. Come on, baby. Load it. They changed this website. I just want the chart. It's usually right here. Here we go. Okay. Odds of a rate hike now 38% for September. Jackson Hole could swing this, right? If we get quiet Jackson Hole, nice and quiet and peaceful, shouldn't be a big deal. Kick the can down the road. Wait for the task forces. But if we go to the end of the year, we're at about a 72.5% chance of a rate hike. Kind of getting a rate hike. So we have to balance that with this Citadel bull piece. Let's do a summary on the Citadel bull piece. Just do a quick run through on it, because I think it's pretty decent. I think they did a good job. Okay. All right. Let's take a sip of some coffee. Lagging again? No, we're all right. Citadel says there are 10 reasons to be bullish, and we're going to break those down in this segment. Now, they are either trying to manipulate us so they can sell the rest of the Leopold position, not that they have any history of doing that, like suggesting 2 days before Leopold got liquidated that rates needed to be hiked in a surprise move. So, you know, you got to take a little bit of the suit commentary with a grain of salt, because after all, they are the suits.
Fetch me.
With that said, we currently have a 72.5% chance of a rate hike. And so I'm kind of starting with the bad news for this year. 72% priced in chance that we are going to get a rate hike this year. The market is only pricing in that in the September meeting, we have a 38.1% chance of a rate hike. So in other words, more likely that we're not. Jackson Hole could change this, as well as NVIDIA earnings and Salesforce earnings later today, and CrowdStrike, right? These other companies that are going to give us insights into the market could say, hey, is the market overheating? Is it not? All of that could sway Jackson Hole. It's obviously a big day. But let's look at the 10 reasons Citadel has for being bullish. And I'm actually going to add number 11. This is the opposite, what I'm going to say about Donald Trump, as what The Economist says. I want to be very clear about The Economist. They really dislike Donald Trump, okay? They really dislike Donald Trump, and they say that as Donald Trump becomes a lame duck president after midterms, when in doubt, lash out. And they basically think that as his dominance gets more threatened, the world is going to find him more disruptive than ever. So expect more problems with Canadian tariffs and problems with other countries. Those things are bearish. That's the opposite of what I'm about to mention. For example, The Economist also has another piece talking about how Mark Carney should, basically Canada, let me put it this way. The Canadian government as a whole Carney specifically, should essentially fold. And they should try to get a little bit of a better deal, but they should fold to Donald Trump because he's going to lash out and make things harder. And so if they dig in, that could be bearish because Donald Trump ain't going to give up. And I think that's the whole chaos theory of it all. That's a little bearish because it adds some more inflationary pressures if we end up having an expanding trade war with Canada. With that said, I actually put reason number 0 out of 11 reasons here. Donald Trump wants to pump up the market before midterms. We're 69 days away from midterm. He tweeted or truthed this morning that we want oil, we want oil prices down. We see oil prices are coming down. We want more flow through the Strait of Hormuz. He argues that the Strait of Hormuz is open. He argues that something good is going to come from the CIA visit to Moscow. That was some of the optimism that I talked about yesterday in my Russia video, that Radcliffe going to Russia is probably a good thing because, what we saw with Radcliffe going to Cuba was more positive than what we saw with Iran or Venezuela. So that makes me optimistic that Donald Trump is going to pull everything in his power to pump this market over the next 69 days. Keeping in mind that Donald Trump is also now directing Marco Rubio to sort of accidentally leak that we're going to conduct fewer strikes, maybe no strikes on Iran unless they're defensive in nature, so that way we can reduce some of the oil volatility in markets. Last week, before the economic D-Day that came from Scott Bessent, we were looking at oil prices around $94. Now, oil prices are sitting at around $86 on Brent, and part of that is because well, it's 87-ish now. Part of that is because Scott's economic D-Day was a joke. Russia even made fun of the economic D-Day and called the economic D-Day a complete joke and that Iran shouldn't take it seriously. It's because Trump's got to pump it up before the market, before midterms. So if you don't pump it up before midterms, you might not get what you want in midterms. You got to make people feel good, get those gas prices to come down again. So that's reason number 0 I give for being bullish. Let's go through some of the others quickly here on Citadel, talking about enthusiasm for markets. And what we'll do is we'll actually go in reverse order on this. Just because the last one I think is one of the biggest points, and we'll spend a little bit more time on the last one. But going from the bottom up over here, basically Citadel argues that people are starting to hedge the right tail. This is a fancy way of talking about a bell curve, a normal distribution pattern. And the right tail is over here, which is that markets are actually going to perform much better than you expect, whereas the left tail risk is markets are going to perform worse. This is a recession. This is a boom, right? And so they argue that right after Leo Fold got Leo, liquidated, they argue that we saw the largest 5-day period of call volume history ever on the S&P 500. So people are trying to hedge their upside, taking advantage of lower volatility that we're seeing in markets, and therefore buying options. And that's actually, so that's point 10. Point 9 is that volatility is low, which potentially leads people to take on more risk as volatility has declined, especially over the last 30 or so days. So they see that as an upside opportunity. Reason number 8 they give is that breadth is up and correlation is down. Basically, we're becoming less sector specific in solely what's driving the market, and we're seeing a lot more of a rising tide lifts all ships. I have a thesis for this, and it has to do with enterprise artificial intelligence, which we're going to talk about in just a moment. But if you look at the RSP, and we've been talking about this in our course member live streams for a while now, RSP, every single day, even though the Qs can be volatile, they go down, they go up, all this nonsense, RSP, which is the S&P 500 equal weight, which reduces some of that technology exposure, is basically hitting all-time high after all-time high after all-time high. I mean, we've been on straight all-time high hits since April here, and it just hasn't stopped. I mean, there was like a little moment there during the Leo fold, and these are on the weekly bar charts. So RSP's been crushing it, and that's basically a reiteration of what you have here. More than 70% of the S&P 500 sits above its 200-day moving average. It is worth noting that some stocks are under their 200-day moving average. I actually think that creates a little bit of an opportunity. Meta stock, for example, Netflix, ServiceNow, Salesforce are close to their 200-day moving average. AppLovin is under their 200-day moving average. Each of these three, by the way, here in the advertising space, which I think is a sector that we're going to see rotation to. So I think it's just a matter of time before the 200-day moving average gets exceeded for those particular plays. Something to note, though, about concentration and the S&P 500 is that the S&P 500 is, and this is not the equal weight, the normal S&P 500, is seeing more concentration into technology. So that is, in my opinion, near-term fine, but long-term does create some more risk. So I wrote that nobody wants to believe that in a recession or depression, the S&P 500 can meaningfully rotate down. You know, like, oh my gosh, there's no way the S&P 500 is ever going to go down 80%. Well, if we had a 5-year-long depression, it absolutely could, especially if you don't have somebody who wants to V-shape recovery money print us out like Kevin Warsh, because I don't think he will. I think he will leave us suffering. A free market's going to take over while you're suffering at the bottom. It's fine. Arguments for a different video. But in my opinion, this increasing concentration here to IT, where you've got 37% exposed to information technology, if you add in tech, if you add in financials, the S&P 500 is 49% tech and financials. Now, people argue like, oh, but Kevin, why would you lump financials into that? Well, because financials include investment banking, funding for IPOs, debt financing, trading, crypto revenues, brokerage revenues. All of those revenues collapse if tech collapses. So literally half of the S&P 500 is really exposed to a collapse in tech, should there be a collapse in tech. Notice that the S&P 500 is only 6% exposed to materials, utilities, and real estate. Look at how much materials, utilities, and real estate have collapsed over here. I just posted a video yesterday where I talked about our sector allocation. So I put sort of a pie chart out and I'm like, you know, this is where we sit with cash. This is where we sit with stocks. This is where we sit with real estate. And the vast majority is real estate. It's actually very interesting if you think about that. That means that my company, Reinvest, is literally a substantially and more massively exposed to real estate, whereas the S&P 500 is literally the least exposed to real estate. Like, I wonder if you break down the materials, utilities, and real estate, how little is actually left for real estate. It actually, you know what, that's an easy one we could probably look up. I'll look that up as we keep talking about this. Let's see here. How much S&P 500 is exposed to real estate, materials, and utilities, but divided out. So we'll figure that out. Okay, so while we wait for that, let's take a look at the next argument here. Buybacks. So we sit right here in the buyback authorization window. The buyback window closes again when we get to the next earnings sector over here. So my thesis, and could be wrong about this because it's just going to depend on NVIDIA and some of the software plays today, but after NVIDIA, we get bullish Trump plus 10 reasons from Citadel plus buyback window, well, buyback window, including buyback window, I should say, buyback window. It makes for a bullish potential 6 weeks, you know, leading up to the Anthropic suckening. Anthropic suckening. Because the Anthropic S1 is probably going to be a oopsie doopsies. Somebody says, rotate into ads, would you ever consider Trade Desk again? You know, it's funny you say that. I actually was asked exactly that in our course member live stream. Somebody's like, Kevin, you like Meta, you like Netflix. I even like the advertising part of Google, even though I'm not exposed to Google, right? Like, Kevin, what about Trade Desk? Isn't that an opportunity? So we got rid of Trade Desk at like $120 a share. And it's because we saw a red flag coming from Netflix. Unfortunately, my stock algo has even more downside ahead for Trade Desk. I have this at like a $4 fair value estimate, which is really bad, like really, really low. And you might be wondering like, Kevin, why? Like, that's terrible. Why is it so low? Well, I'll just give you the answer right here. Their revenue is up 3% and their costs of goods sold increased 22%. Growth has collapsed and costs are exploding. Now, Meta is still growing like crazy. Now, their costs in fairness in the last quarter have expanded more than they have in prior quarters. And so it makes you wonder, like, is that a trend? Is it one time? You know, so there are things to pay attention to fundamentally at these various different companies. But the trade desk numbers are bad. And maybe they could turn it around. I hope they could turn it around. I'm, like, jealous. I shouldn't say I was jealous. I'm not jealous of the trade desk. I am, well, okay, let me figure out how I'm trying to word this. Trade Desk is the biggest company in the city that I live in, Ventura, California. I would love for them to boom because it helps the city, right? So, like, I want to see them win, but they need to turn it around because right now, their margin trajectory justifies a very low price target. And so they need to turn that margin trajectory around. Anyway, thanks for asking the question. Okay, so buybacks was reason number 6. Then we've got the bid never left. This has to do with inflows. Okay, $7.5 billion of money every single day flowing into the stock market, which is crazy. The households are becoming ridiculously exposed to the stock market, mind you. Oh, I got the data. It says here, real estate makes up 1.7% of the S&P 500. Holy moly. I mean, think about that for a moment. That means, like, if you invest, if you would have exposure to like reinvest or previously house hack, and then you have investments into the S&P 500, you're actually now diversified into stocks and real estate because the S&P 500 basically gives you no stock exposure or no real estate exposure. It's very interesting. Okay, so portfolio allocation. So we saw the inflows. Then what we have over here is, this is retail buying again, basically becoming a net buyer when we were not, apparently, the last week of March. I was buying the geopolitical dip. We're buying the Leo full dip. I even made a YouTube video saying buy in the title on like July 26th. Looks like the day before the liquidation. It's like, it seemed like somebody was getting liquidated. Leverage has reset. It says, the liquidations have occurred, says Citadel. And now forward price to earnings ratios are really sitting in the bottom half of valuations. Some of this could be nervousness because, like, is the boom going to keep going? That's the big question. And then this is where we get to the most bullish reason. In fairness, it has to be hedged, right? We have to hedge by them saying, oh, this time is different. It might not be. It probably won't be. Like, at some point, it's all going to come collapsing down. You kind of have to be prepared for that. But between now and then, I think a lot of money is still going into what I call enterprise artificial intelligence. And so that becomes the number 1 point. This is valuations. Earnings are doing the work. That was the number 2 point. We just talked about valuations being on the lower half. But this is the interesting part right here. Earnings are better than feared. Earnings are driving the steepest revisions since 2000. And my opinion as to why earnings and the RSP are broadening the wealth effect, the equal weight, is because the cycle of artificial intelligence spending is lifting all ships. That's my thesis around it. And so a lot of people have asked, including this commenter, like, Kevin, you keep talking about enterprise AI and you talk about buying your own chips. Like, why does Reinvest buy its own chips? Why do we have Blackwell chips? Why do we use small chips, big chips, whatever? Why do we use them all? And there are many reasons for this, and I think structurally it's really important to know them as an investor. So here we've got Let's Do Work. The Work says, I would love a video on why you need to buy your own chips versus just buying compute. It's obvious it makes no sense for you to run your own chips and mini data center. So first of all, between you and me, this guy's probably over allocated to compute companies because the statement, the question, the way it was written is so loaded. He's basically saying, like, I mean, you could see where the emphasis is. It's obvious it makes no sense. Is it? That's a loaded statement because it does make sense. You're just not aware of why it makes sense. So it's not obvious. This is actually unconscious incompetence, right? You don't even know that you don't know. And I'm not trying to bag on the person. I'm just saying the way they wrote it is condescending. Makes no sense for you to run your own chips. And then chips in quotes as if like, well, your Blackwell chips aren't as good as Meta's chips. Well, no SH9T. That doesn't change the facts, though, homie. Okay, so let's get real here. So, first of all, why would it make no sense? They've doubled in value, they've paid for themselves, we keep our own data, and we're able to be much more flexible. So let's break this down. This is exactly the same argument that every enterprise in America can make. We don't all need to spend money on a GB300 or Rivera Rubin $4 million rack, but we could spend, you know, $200,000, $300,000, $405,000, whatever, on chips and infrastructure, and it could actually be a profitable investment. Why? Well, for various different reasons. Number one, if you buy compute or lease it, we'll come back to this one. This is an accounting piece. We'll talk about that one in just a moment. Keeping your own data. Let's go in sort of reverse order here. Keeping your own data is critical especially when you're a startup or a healthcare company like a Moderna, for example, because we already know that Claude and OpenAI want to replace the very software companies they're pretending to partner with. There was a really big argument that Figma partnered with Claude, and then Claude potentially used some Figma IP and then came out with Claude Design. Now, Claude obviously denies that. They're like, oh, we were going to come out with Claude Design anyway. But now companies like Figma are like, wow, we're getting basically replaced by the very company we were partnering with. So there's a very big hesitance towards sending your healthcare data or your proprietary weights and algorithms to the big cloud services, the Claudes or the OpenAIs. In addition to that, it's very expensive to use these models. Claude or OpenAI, you know, there was just a DeepSeek article. We could pull that one up really quick. Claude or OpenAI cost a fortune more than some of the open weight models. Here you go. Look at this. So if you look at this, Moonshot charges $15 per output. Claude Opus 5 costs $25 per output. And you've got DeepSeek that is at $4 per output. And then on top of that, which they don't mention in this article, but you've got models from Baba like Qwen that are even cheaper per output. So do you want to send your data to the cloud and lose your proprietary protections? No, most enterprises don't. What does that mean? Well, it means a lot of companies are probably going to buy their own enterprise hardware. That might be why Dell is doing well. Supermicro could benefit from that as well. But these are lower margin businesses, so it makes it a little harder to want to lean on those. Although Dell's been doing phenomenally, so obviously, you know, people are interested in that trade idea. Utilizing open weight models not only protects your data, you protect your own weights, but it also reiterates why you would buy your own chips. In addition to that, you get more flexibility with your own chips. Why am I going to rent a 256 gigabyte VRAM chip if a 32 gigabyte or a 96 gigabyte VRAM chip will do? 32 gigabyte is a 5090 Blackwell, NVIDIA gaming chip. The 96 gigabyte version is your RTX 6000, which costs like 3 times as much money because it's got 3 times the RAM, you know? If you don't need it, you're wasting that utilization. Why are you going to go rent bigger chips from companies that scale with the bigger chips, the H100s or whatever, if you don't need them, right? Moderna doesn't need to run their mutation algorithm for cancer drugs on a GB300. They could literally run it on a 32 gigabyte VRAM chip. You don't need it. So why are you going to pay for it? So more cost effective to have your own. Not only is it more cost effective to have your own, but you keep your own data secure. You're able to use open weight models the way you want to tune them, so you get the flexibility. All of that leads to more spending at enterprises for having their own basically data centers, right? You take the 5090s, RTX 6000s, you plug them into a 240 volt, 30 amp circuit, boom. You could run twice the machinery you can on a 120 volt circuit. Yeah, you're still using the same wattage, but your amperage is in half, so you're not popping your breakers. The other reason bigger companies care about this, and this is a difference between bigger companies, we don't really, our spend on chips is relatively nominal compared to, some of the largest multi-billion dollar enterprises, right? But the multi-billion dollar enterprises, they would rather invest in their own chips because that's a balance sheet investment, right? You go from cash turns into a balance sheet asset rather than cash turning into an expense which shows up on the P&L as a money loser. So if you rent compute Think about this. This is probably one of the big lessons, because then it helps you think about where to invest. If you rent compute, okay, you spend $100 in rent. That $100 in rent goes straight into negative $100 for your net income, right? So that actually hurts the company's bottom line, their earnings per share, or whatever. If I now come in and say, oh, well, no, we're actually going to spend, negative 80 on an asset and negative 20 on, let's say, power, okay, just as an example here, oversimplifying this. Well, now I put the $80 over here as an asset on the balance sheet, and the net income only shows negative $20 to the net, because the power expense flows to the bottom line, the asset investment flows to the balance sheet. And so EPS, the effect of this is EPS looks higher for bigger companies who are actually spending a lot of money on this enterprise chip. So it makes sense to own your own hardware for many, many reasons. And that's another reason, in my opinion, to be bullish. I think that's why a lot of companies are investing in their own hardware as opposed to only relying on the cloud. Endless reasons for that. So all of this together puts a very strong, bullish potential on markets once we get through some of these negative catalysts, or like concerning catalysts. They're not necessarily negative, but Jackson Hole, we got J-Hole on Friday. Remember, join Meet Kevin and the courses over there on building your wealth. You get all the trade alerts and everything. Join that before Friday. So that is the J-Hole coupon expiration. You can get that over at meetkevin.com. Yeah, it's a good segment on Citadel. Okay, what else? Oh, one thing to note. Let me just make this clear, because otherwise it might be a little confusing. Okay. Quick note, big expiration for the Meet Kevin membership and trade alerts, lifetime access to the alpha reports on Friday, but we are also removing the lifetime pricing for the Homes Reinvest AI. That's going to be pretty expensive on a monthly basis, so if you want to lock in lifetime access, make sure you get that over at meetreinvest.com or meetkevin.com for the alpha membership. Cool. All right, let's now go listen in to what the suits are saying today.
More mature businesses where they can actually feel confident in their forecasting, quarterly reporting, all the things that are required once you're a public company. And so I do think we'll start to see more of them come public. I also think some of the tech backlog are software companies that have questions from, would in this environment have questions from investors in terms of the implications from AI.
Sure.
That will play out over the next year. And so I think some of those companies will be beneficiaries and be able to.
All right, lady. Too boring. I need some more energy. These are more coffee is what I need. Let's see what we got over here.
As teens move fluidly across dozens of apps, we need an industry-wide solution.
What?
We therefore call on our industry peers, TikTok and YouTube.
Oh, this is scripted. God, the guy sounded like a robot.
I think we need to keep talking about this part of the story. Meta is saying we want to see our peers participate.
This is the guy who Ed Love is a good guy, but he's also the one who said NVIDIA.
Again, please, Attorney General, sign sort of the likelihood that you see in that happening.
I actually can't see the screen, but through my earpiece, that certainly sounded like an AI video.
It did.
I think it's very likely. Our office and my team of lawyers who worked on this case and I are very bullish about the other social media companies adopting this, because here's the thing. All of these things cost money, and kids always need money from their parents. And so they will, in my opinion, they will be a market aberration if they aren't providing these kind of protections to teens. And so I think in many respects it is they should want to implement all of these safety precautions, not only because they're great for kids who are their customers, but because they aren't going to want to be seen as the social media platform that is the only social media platform left that is still harming teens in the way that this lawsuit outlined. Because the theories are identical.
We're live on Bloomberg Television and on Bloomberg Radio speaking to West Virginia Attorney General J.B. McCuskey. There is an independent auditor that will monitor compliance.
Yeah, this is old news. All right, we get it. Let's go look at the sticks. Oh, hold on. What is this? The IAEA cannot ask to inspect Iran's nuclear sites until it draws up a protocol. Oh, interesting. There's actually talking about inspections going on? Ah. Well, let's see what this is. Some kicking the can down the road here. Okay, so let's write this down too. Geopolitical. All right, so what do we have here? We have, this is, here it is, Iranian nuclear chief. Trump threats to bomb alleged secret Iranian nuclear site show how international organizations are pawns of U.S. and Israel. Okay. International organizations are pawns of U.S. and Israel. Nuclear material sites need better protocol before inspections. And they're basically saying they're still in a wartime, so they're not ready for inspections. Not ready for inspections due to wartime nature. Sites have not yet been secured. Sites not yet secured. Okay, so what does this mean? In my opinion, IMO, this rhetoric is actually a step in the right direction. Suggests at least a conversation about nuke inspections is occurring. I would I would be so happy if Pickaxe Mountain got inspected. If Pickaxe Mountain got inspected, I'd become even more bullish. Even more bullish. She can't type today. Maybe I could just never type. Maybe it's not just today. Maybe the problem is you. Let's see. This morning, Trump also suggested Hormuz is open, flowing oil. IMO 69 days to midterms has to pump up the markets. And then, of course, you have Marco Rubio's. Oh, yeah, we were going to grab that from Axios. Let me see here. Send that. Okay, Axios. Where was the Marco Rubio part? Marco Rubio Axios. I'm just going to Google it. There it is. Rubio tells allies U.S. is shifting from strikes to sanctions. It's honestly bullish. Rubio focus on reduced strikes. Axios story. That's also bullish oil, right? Bullish oil prices coming down. Have to be clear when I say bullish oil, that's not bullish oil going up. Recent days, for the time being, the U.S. is not expected to initiate new strikes against Iran. Focus on other means of pressures, including the initiatives announced this week, which was the D-Day, which was a joke. Avoiding military action against Iran for the time being, increasing economic pressure through sanctions and the blockade, transporting oil as much through the straight as possible. Yeah. Expected to be the policy until at least midterm elections. When the new military campaign can be on the... Dude, they're saying the quiet part out loud. That's hilarious. Oh my lord. They're literally saying it out loud. I mean, it's so obvious. But an error was thrown. What the heck does that mean? I've never seen that before. An error was thrown. I can't upload pictures now. What's going on? Software and errors. There we go. Okay, cool. Okay. They're literally saying the quiet part out loud. Wait until midterms. Quiet until then. I mean, bullish next 69 days, I suppose. But really combining that with this inspections talk from Iran, that's actually great. So let's pin that. Pinned. So this is bullish. This is bullish. Iran, even just talking about openness to plans of inspections is huge. Would love to see Pickaxe Mountain inspected. This is a big shift in tone from Iran. Pin! So when I pin stuff like that, by the way, it just ends up showing up in at the top of the alpha wire, which we think is quite useful for you. Remember, you could get that in the Meet Kevin app. So, for example, this is what it would look like. You get the little pin note at the top. So that way, if there's something that's really juicy to pay attention to. Yeah. Okay. Since economic D-Day flopped, is there a chance he could resume strikes unprovoked? Yeah, never mind. Yeah, exactly. It sounds like they're after midterms. Yeah. So, I mean, good. Great. We don't need more crap right now. Okay. Next, let's look at... Let me see if I can get the earnings call for Meta, because I want to see a little bit what's going on. Meta earnings call. A little bit of what's going on. It should be in May, right? Meta earnings call. Ooh, Meta earnings call. Yeah, here we go. Actually, July. All right, that's fine. So here's the Meta earnings call. The loop of spending, you know, we know that. We know they're going to keep spending money. But what I really want to see is the cost of those ads. What happened with the cost of the ads? So pricing, maybe. Let's see if we can get something on pricing. Memory pricing. Custom silicon we're developing with Broadcom. Significant amounts with AMD. Primary goals is to lead the industry in efficiency of building compute. Expect that to be a strategic advantage. Component pricing. No, nothing on ad pricing. Anything on margin? Operating margin 41%. No, that's the only mention here. What about cost? Lowest cost. Okay, let's see. Yeah. Value optimization suite. Okay, give me one sec. Is that up yet? No, not yet. Okay. All right, let's see what we have right here. We also continue to invest in the value optimization suite, which helps advertisers maximize their return on ad spend. Right, critical. Ad suite. Rather than optimizing solely for the most conversions at the lowest cost, they want the highest value conversions. That makes sense. Adoption by business has been strong following improvements we've made, with annual run rate of our value optimization suite now over $20 billion, more than doubling year over year. Yeah, I mean, think about that. Just just their ad, optimization suite is at 20 bill, which is 1/3 of projected Anthropic ARR, right? And Anthropic, and that's just one part of the business. Kind of interesting. Platform through ads, posts, brands are increasingly turning creator. Let's see, this to support the product delivery and purchases, expanding solutions beyond ads, affiliate partnership, tag products, discover products, blah, blah, blah. Compute is becoming increasingly important as it determines the quality of services we can provide, blah, blah, blah. Investing, signing cloud deals, blah, 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 blah. Yeah. That's the key for them is how do you squeeze more margin out of ads. All right, what do we have over here?
I mean, there's a lot of activity, a lot of noise. I think sometimes a lot of misinformation about what's going on. I mean, we try to talk about what we're doing here in our territory and how we are doing contracts, how we're structuring contracts to make sure that existing customers are protected and that benefits provide, stability is provided across our business for all of our customers.
Let's go with a case study to explain the operational challenge, and that is OpenAI in Savannah, recently announced. How does something like that come about from the utilities perspective, and how do you respond to a big data center plan that goes in?
There's a lot of engagement that we have across our business, across our company, with a lot of hyperscalers, with a lot of data centers in terms of what their needs are, what parts of the country they want to locate. Then we will work very closely with the local communities in terms of what potential locations are available. And then we begin to plan.
Let's go to Seamus's. Gosh, I'll fall asleep. I have to get more coffee if I keep having to hear this. Oh, okay. Nothing on over here. Okay, fine. No problem. All right. Let's see what else is cooking. Let's go over here. Meta, 18 billion to settle claims, NVIDIA earnings, barometer, we saw that. Let's see. Flash flood hits Nepal, China border. And I saw some videos of this. It's just terrible. Let's look at this revenue share between these, Oman and the Strait of Hormuz. Let's see what we got here. Okay. So, revenue share. That. Right here. Okie dokie. So let's see what this yapping is about, because this is exactly what Trump said he wanted to strike Iran for. Iran's military said it reached a revenue-sharing agreement with Oman. Okay, so Trump last week suggested he'd bomb the SH-9T out of Oman for sharing revenue with Iran. Today, we hear Iran reached a deal with Oman to do just that. Keep in mind, above, Trump just said they won't bomb Iran. So, oh, look, they're talking about it right here.
New sanctions from the White House. But then there's Iran's Revolutionary Guard says the strait will remain closed if the U.S. doesn't accept Iran's conditions. Our next guest served as President Obama's senior Iran advisor, joins us this morning with his outlook. Let's bring in Puneet Talwar, former Secretary of State for Political Military Affairs for the Obama White House, and U.S. Ambassador to Morocco under the Biden White House. Puneet, welcome back. It's good to see you again.
Great to see you again, Carl.
We've been getting sort of conflicting messages on kinetic stuff from Secretaries Rubio and Hegseth. I'm assuming you think that's it's a possibility that's still live.
Yeah, very much so. I think this is a very tenuous situation. The relative lull we're seeing right now could very well be illusory, and that's for a few different reasons. Iran basically is not going to accept for very long a situation where the blockade prevents it from exporting oil while its neighbors are able to do so. You also have a more hard line and risk-taking leadership, and a leadership that believes that President Trump is fundamentally not interested in military escalation. So it may be tempted either directly.
Yeah, they're calling his bluff. Makes sense. I mean, he's literally saying it.
Against its Gulf neighbors and their energy infrastructure in particular. So I'm not saying it's a guarantee, but it's a possibility we should watch for.
Certainly the commentary from Netanyahu in the past 24 hours would add on to that. He said that essentially he doesn't believe any diplomatic solution is tenable.
Well, I think Prime Minister Netanyahu has long held that view. He was very much opposed to the MOU that President Trump reached with the Iranians. And I think that the Israelis basically view this as a very long, drawn-out conflict, and they don't think that really peace is going to be possible with this particular Iranian regime.
How should we think about economic pressure and the potential there? This week, Secretary Besson announced an economic D-Day or Operation Economic Outcast. Not naming China, but kind of the elephant in the room there. What type of pressure campaign could the U.S. put on Iran economically?
Well, the sanctions announcement that I heard, having actually participated in helping to design and implement many of these sanctions 15 years ago, some of the toughest sanctions on Iran's oil, on its central bank, I don't really see anything new in terms of dramatic new areas that we're going to be sanctioning. What I did hear
there is nothing new. It's all the same crap.
About enforcing existing sanctions. But on that, as you suggested, time will tell. We have an upcoming summit between President Xi and President Trump. Will the United States actually be prepared to go after Chinese entities, which are a major lifeline for Iran at the moment? And I think we have to wait and see whether that's going to be possible. But I would say that the blockade is much more of a significant issue and having much more of an impact on the Iranian economy than any of the sanctions that we're talking about.
Abraham Lincoln, I think, has gone to Thailand, and the George Washington taking its place. Not to mention the discussions about munitions that we burned through. How much of it do you think is about the degradation or the confusion in military assets overall?
Well, you know, I only have seen what I read in the newspapers. I don't have information any longer to classified information. But it does seem that based on the public reports, we have seen a big expenditure of critical munitions. The Iranians are seeing that as well, and that might be driving some of their calculus as we go forward here. So, and you know, the Lincoln, as the report suggested, was on a very long deployment cycle. There were challenges apparently in terms of resupply and logistical support. And so all of that, I think, will need to be addressed. I think the Pentagon has a lot of evaluation to do, and I think the Secretary of Defense has a lot to answer for here.
To Leslie's point about economic sanctions, some have suggested that maybe what's been just as significant, Puneet, has been the UAE and their willingness to cut off trade with Iran. You think that sort of does that congeal in the Gulf states with what we're trying to do?
Congeal.
Yes, it can make a big difference. Dubai in particular and other parts of the UAE have been a critical outlet for Iran to get access to the international economy through front companies, through exchange houses that have been there, frankly, for decades. But it's not just the UAE. China, again, plays a critical role. Iraq does. Turkey does. These networks have developed over a long time. Iran has gotten better over the years about finding workarounds, about creating new front companies, and it's a constant game of whack-a-mole. We shut down certain financial institutions, we go after front companies, and Iran creates a new set, and the cycle repeats itself. So it's not going to stop, essentially, with just one country saying we're no longer going to trade with Iran. This is going to have to be an ongoing effort.
You didn't even mention Russia and the degree to which they may or may not.
I'm gonna write that. I like this guy's commentary. I pretty well agree with it. This idea that let's keep listening to it for a second. I'll consolidate.
And Russia has really leaned on Iran, particularly for drone technology, the Shahed drone, which has been used to very devastating effect in Ukraine. And so that relationship remains tight. You have the Caspian Sea, which allows another exit point for Iranian trade as well, directly to Russia's borders. So, you know, sort of tightening the noose and cutting off all of Iran's outlets is going to be really an impossible task. I really think the solution here remains a diplomatic one, but we can bring certain pressure to bear, but the pressure has to be in service of an objective. And the objective seems to be very unclear. It seems to jump around from day to day.
This guy's good.
Yeah, I think it was the Times earlier in the week that said if these sanctions are so airtight, why weren't they employed earlier before you went to a military option?
Yeah, I mean, that's all a really good point. So basically what he's saying is, like, Iran is going to evade all these sanctions anyway. They've been good at evading them before. They'll just evade them again. Like, this is no different.
On Oracle this morning, the analyst behind that.
I think that's really insightful. And then we had the note about, where was it? Yeah, okay, about the nuclear inspections. Okay, perfect. Okay, good. Yeah, I mean, this is all very insightful and good. Okay, good. Okay, and then I just got a note. Apparently, a lot of course members are emailing us for that bundle. Keep in mind, we've got the alpha report and the membership at meetkevin.com. And then we got the Reinvest Homes AI. The lifetime for the Homes AI part is going away forever. But if you lock it in, you keep it forever. And so you just email us at kevin@meetkevin.com if you're a course member to get the bundle code. If you're not a course member, you can become a course member. You can join the Meet Kevin one and then add that one in if you want. But anyway, okay. So let's take a look at El Thickle again. El Thickle. I've got Whittier at 84 bips. Q's slightly green here. Netflix slipping. Marvel slightly green. I mean, everything's kind of just, you could feel how tenuous everything is. Like, we're barely going anywhere, right? Wow, Intuit's recovered a lot. It kind of honestly suggests that they've sort of bottomed. You know, this line right here, 336, that's becoming a pretty damn good bottom for this stock. I'm not here to say this thing's gonna rocket ship tomorrow, but you know, I like the stock. 336.88. Oops. Let's do this. Watch this. 336.88. I'm gonna go purple, thick, and then we're gonna move that because I can't change them all. Otherwise, it'll be, you know, all the fibs will be this. We don't want that. There we go. Yeah, that's clean. After this earnings, look at that. That's a clean tripler. Plus a rejection, multiple rejections right here. Failed breakout right here. That line is critical. Man. If you have any questions, hit us up at staff@meetkevin.com. We'll take care of you. See your questions about L courses. We'll help you. We want to help everybody. Okay. Okay, so let's now see yields, and then I want to see what the suits are up to today. We did a valuation on Meta too. Maybe we should do a quick summary on the Meta valuation just to bang that out. Morgan Stanley now says SpaceX is attractively valued. Dude, Morgan Stanley, it was just Adam Jonas again. There's such chills, baby. I love it. Okay. Adam Jonas. Here he is, Adam Jonas. Back at it again. Adam Jonas hears about the ambitious $100 billion spaceport in Louisiana, and Adam Jonas says, you know what? We have a $300 price target. This is set to support thousands of launches annually. That is what we said yesterday. The construction of the launch pads means the stock is no longer pricing in the potential of far more aggressive levels of launch cadence. that could occur beyond our 2040 estimates. Honestly, I that's what I was saying yesterday, was that this is probably a 2040 issue, right? 15 launch pads, far more than the 3 they already have. Yes, Jonas thinks X needs 8 to reach the 2040 forecast. Point is, we don't need an operational starbase to get to 2040 targets. Bull case implies attractively valued at 136. We do not believe investors appreciate the scale of what SpaceX is planning. But you have to go through the debt cycle first, right? So that's the problem, is you have to go through the debt cycle first. It's like, where are you going to get all the money from to do it all? And that's a big thing. So do I still see it? I think NVIDIA is fundamentally undervalued based on today's growth levels. The biggest risk factor with NVIDIA is that the growth levels might be wrong, right? Because if terminal growth for NVIDIA is negative, then all your PEG ratio math goes upside down. So that's why I personally think, there are more attractive opportunities for substantial upside. Like, I personally think, this company right here, Intuit, is an $800 stock, at least. Once, they confirm their turnaround, it'll be even more than that. That's a $800 stock. That's, more than a 2x. And I still think that's conservative. Whereas, NVIDIA, could it 2x? Sure, it could even justify 3x at these growth levels. But it has some real problems about what's that terminal growth rate and what do we think, the law of large numbers does to a stock in terms of keeping it down. It's a lot harder to move a $5 trillion company than it is to move a $93 billion company. Okay, so this was the SpaceX Jonas note. That's cool. Let's see what else is cooking in the suit world. And let's see. Besant. That was stupid. Oh, there's a piece on Intuit. Okay. So, what do we got here? Let's take a look at what DB says about Intuit. So DB has a buy target for them. Intuit officially reset its strategy. Yeah, I called it the kitchen sink order. Reset. I called it kitchen sink. That's fine. Reset its strategy and focus. And for several years of driving growth through increasing upmarket focus, services attach and pricing, management acknowledged customer growth this year was disappointing to address. Management has taken steps to acquire customers earlier in the journey, albeit at lower initial revenue per customer. We believe while a reset is prudent and likely necessary, you do not expect investors to award the meaningful credit until there's tangible. Right. In other words, like, AKA wait and see for Intuit. I agree. No rush. I do think 336 might be a stable bottom, but I don't see a huge rush to get in. Customer acquisition, let's see, negatively affects guidance. Company also introduced new medium-term CAGRs. Driving customer growth today versus years past may also prove more challenging given the company's current upmarket focus. That said, we believe Intuit retains important competitive advantages to the most recognized brands and customer services. Additionally, Intuit, blah, 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 data, look forward to customer acquisition. Yeah, the fact that they have customers' data is so huge for them building out their AI. Company continues to target high teens EPS growth. Right, we've got them at about 18%. Results were ahead of expectations for the last quarter. Expect shares to remain in the penalty box. Yeah. Yeah, I think that's a fair way to put it. Maintain our buy rating. Target price of $400. QuickBooks roughly in line. Growth drivers for management. Blah, blah, blah. There's not much new in this. Cyclicality exposure due to small business economy. Yeah, that's true. You know, if macro suffers, then consumer credit and small business subscriptions suffer too. Tax simplification, execution risk, mergers, blah, blah, blah. Sure. Okay. Not really insightful, Deutsche Bank, honestly. I'll save it, but it wasn't that freaking useful. Okay. So, let's go back over here. Specific call on the queues. It's really going to come down to how NVIDIA plays out. I'm bullish. I would say I'll figure out how bullish once we get through NVIDIA. I do think in the 6 weeks before midterms, as long as NVIDIA doesn't kick the bucket here, which even if it goes down a few percent, that's not going to be bad. The catalyst will be over. But we should be able to break through all-time highs again. And we haven't for a while. Like, we rejected, what, 748, I think it was? 747.81 back in June. And we have not been back there. So we need to break through that. That'll be where the target is, assuming we can get through the Warsh catalyst and the NVIDIA catalyst. Although those rate hikes are coming. At least that's the current pricing. All right. I need another cup of coffee. Let's see what the doomers are saying in the meantime. Russia preparing to escalate attacks on Ukraine after concluding that negotiations for a peace deal have reached a dead end. Oh, fantastic. That's bearish. Oh, okay, yeah. Wherever you end up emailing, we'll get back to you. But the most correct email is staff@meetreinvest.com. But if you send it to staff@meetkevin.com, that works too, regarding the course questions. Okay. So, let's here for a sec. I'm going to get my cup of coffee.
Negotiations for a peace deal have reached
Ed.
a dead end. That's according to sources
I just read that.
close to the Kremlin. Moscow is weighing an intensification of powerful conventional ballistic missile attacks on Kyiv and different infrastructure targets based on Bloomberg's reporting and citing those sources. There are a growing number of Russian officials who have come to the conclusion that Russian President Vladimir Putin could eventually opt to use tactical nuclear weapons. That Bloomberg report just broken. Get it on the terminal and .com. Let's get back to the stock that everyone's going to be watching this afternoon, NVIDIA. Bloomberg Intelligence's Kunjan Sabani is with us now. Let's get the BI preview and the BI estimates, Kunjan, for what we expect from NVIDIA.
Yeah, the real focus is going to be the next quarter guide. Remember, this is when the new Vera Rubin platform starts ramping. So far, the expectation is there should be no hiccups, no concerns, no initial ramp delays. So we really expect a pretty high beat in this number. Anything shy of less than expectations would be a negative. But beyond near term, I think what will matter for the stock sentiment are like three key categories. One, the vendor financing, the $500 billion worth of backstop or backing that NVIDIA has announced for financing data center build out. And second is the price hikes, how it impacts margin, is this the only price hike we'll see, and can NVIDIA continue keeping its margins without any further price hikes?
I would just point out that the price hike idea was based on Bloomberg reporting that the server makers had notified customers that would be coming in 27 on Vera Rubin. Real quick, margins, 75%, that is not normal, right, for a chip maker, or it is?
Not normal. I mean, it's industry-leading gross margin, as much close to a software company.
All right.
Bloomberg Intelligence's Kunjan Sabani.
Yeah, I was just hearing them talk about the price hikes. The price hike, 15%, was lower than expected. You know, people were thinking we'd get price hikes of closer to like 18 to 30%. So, kind of interesting. I mean, there could always be more. I don't know what Putin would put the heat on now. Well, because of midterms, Trump ain't going to do anything anyway. in my opinion, all cycles are on that. But I was more hopeful about the Radcliffe meeting. What do we have here? Trump just posted multiple times. Oh my gosh, yeah, he posted like 5 times. There's more meme pictures. Mission accomplished. Why is Trump posting a picture of him and mission accomplished in Iran? You failed. God, he's so good at lying. These are just a bunch of pictures. No news. Maybe all the suits can enjoy their $100,000 faster API access to Donald Trump, telling them that he has mission accomplished in Iran. Oh man. All right. What else is cooking? We need some more cooking. Cook. So today, BTC's sitting at down a little bit, 78. Still leaking a little bit. A lot of red. Dell's doing well though. Look at that. 3% on the day. When are earnings coming up? Earnings are on the 1st. Look at their margins again. Let's go look at Dell margins. All right. I want SEC filings for Q1, please. See, I should be able to just tell AI that with my voice, and then it just appears. Wouldn't that be nice? But honestly, some things are just faster to do yourself. Got it. All right. We got a quarterly report. Pop it open. See what we got cooking. So, net income has absolutely exploded at $3.4 billion. I've got repurchases of common stock at $1.6 billion. I've what looks like a refinance over here. So I got about $2 billion of dividends. No, more like $2.6 billion of dividends and repurchases. I've got about 323 million more debt. 25 more debt. So a little bit of a refinance over there. I've got some CapEx. I got free cash flow of $3 billion in 3 months. That's $12 billion annualized. Lower 2.2. That's 2.2. That's similar to last year. No, they were like this is definitely higher than last year. About 50% higher actually. Okay. If I now do a cash flow yield on them at $12 billion, 12 divided by 300, cash flow yield is about 4%. Wow. Much higher than expected. 4% free cash flow yield. That's pretty good. That's pretty good. Give them credit. Give credit where credit's due. You read it and you tell it like it is, whether it's good news or bad news. Inventories, accounts receivable, lots of receivables. I've got cash. Oh my Lord, look at those bills payable. Holy smokes. About $61 billion of bills to pay. Wow. That's a lot. Because even with accounts receivable, cash, and inventories, I'm at 52. I have to add in the other current assets. And I have 62.3 billion in current assets, accounts receivable, other assets, and cash. Basically, they need to sell all their product to pay their bills. Okay. Long-term debt, I've got 27 and a half-ish, 27.5 billion-ish long-term. You know, a little like yellow-ish balance sheet here, not great. Let's go look at the revs. So net income, the net income margins, they just don't bring a lot to the bottom line, but it's definitely a lot more than they used to, right? So if I look at it as a comparison to top line, only about 7.8% to bottom. It's, you know, low. It's definitely on the low side. This is defense stock level. If I look at my product margins and my pricing, I mean, obviously the products have exploded here. I mean, look at that growth though, that top line. 43,842 divided by 23,378, up 87% increase in revenue. Really, really impressive. Products, 38.1 divided by 17.599 is a 2.1x, and services are up. They're actually down, slightly down. But that's a nominal side anyway. Products expenses, 15,116, 2.17. Up in product costs. So margins basically stable then. SG&A, honestly, their OPEX isn't up that much at all. OPEX signals good pricing power. 9% increase in OPEX. Massive gross margin basically flows right through to bottom. That's great. Well, I shouldn't call it massive gross margin. It's massive increase in gross profits. It's pretty good. That's pretty good. So let's look at the EPS and the financial projections. Let's see here. Okay, Dell. It says 1873 of EPS projected. 1873 Wall Street projected. EPS Jan 27. And then the growth projections, 2135 plus 1781, 1202, 1266 equals 63. So that's about 16. 16 divided by 4. Yeah, 16. So that means a PE ratio for the company is 466.3 divided by 18.73 equals 24 times. 24.90 PE. PE? 24.90 divided by 15.96 equals, it's trading for about a 1.56 peg. That's a little rich for their net margin. You know, a little rich for their net margin. Okay, so let's see what else we have here. Gross margin. How was their gross margin previously? Let me see. 4937 divided by 23378. 21 point. So this was 21.1. And then over here, their gross margin is now 7782 divided by 43842. 17.7. Wow, gross margin's actually declining. So that's interesting. It's probably, I mean, from what we've seen in the earnings calls, it's typically because the more they sell AI stuff, the more the margins are actually getting squeezed. But they're just still making more money overall, right? So gross margins are compressing. They're just selling so much more. They're able to bring more to the bottom line. AI mix is lower margin for them. This is just so competitive. So AI server margins might be closer to 4 to 7%. Just not good. Okay, let me see what else I can see here. Memory costs mostly, I think, get passed through. PCs we know are sucking. It's mostly just AI servers, cloud service providers, whatever. But its valuation isn't extreme. It is a little elevated, I'd say, just for the margin profile that it has. I think some of it is probably boosted by the momentum that it's had. Momentum probably boosts margin cycle, or boosts the current valuation. AI server gross margin should, okay, let me pull their earnings call and see if there's any juice in there. Apple to hold new iPhone launch event on September 9th. Cool. Okay. Earnings call. Okay. Dell. Good old Dell. Stock's done so. Okay. Earnings call. So they have a earnings report coming up in about 5 days. 6 days. So 6 days. What is that? Monday, Tuesday, something like that? All right. Beaming over the earnings call. Always takes a second to get. Come on, buddy. You can do it. You can airdrop. In the meantime, yeah, there's HP and HPQ. They're up a little bit. You've got, I wonder how Hood's doing. Hood, oh, the Q's just dropped a little bit more. Hood. Hood's at a 109. Okay, come on, man. I'll just text it to myself then. Oh, okay. As soon as I give up, it comes through. Dell earnings call 826. Put that into research tab. Pop. Okay. Let's go see what they yap about in their earnings call. So just take a second. Get the bookmarks in. Okay. So let's hit the bookmarks first. I always go in reverse order on these. So the bookmarks say, let's see, underscored agility, broad portfolio, team executed very well in challenging environment, delivered record EPS. Demand was stronger than we anticipated across all lines of business and geographies, with customers moving decisively to secure supply, meaningful scale, record cash generation, blah, blah, blah. Spending tremendous amounts of time, NAND, DRAM, processors. Okay. Historical models. We're finding new uses. I mean, the way I get asked this, or I'll ask you, is what's the value of adding artificial intelligence to every workflow, every decision? every product, every customer interaction. I would assert the value is pretty darn high. Yeah, I mean, I definitely think there's value of like AI and human. Together, pretty good. You know, if the human's only copy and pasting AI, not good. Okay. I think that's the game changer since October. What's happening in agentic? You're seeing new categories of TAM expanding. You have 3 microprocessor leaders talking about the expansion of CPU TAM. Why? CPU TAM is being driven by agentic. What's happening in agentic? Agentic is really a movement from AI, from an advisor to an operator. We're going to do something now. Blah, blah, blah. Input, output, CPUs, harness, blah, blah, blah. Continues to grow at a rate we've never seen. It's pulling the entire ecosystem. Trifecta. It's got to be stored. High performance storage. So basically, you know, the GPUs to train, the CPUs to operate, the, you know, the NAND to store, basically, is what their sort of triple trifecta bullishness is. Okay, let's see here. AI server outlook. So let's write down, let's bookmark trifecta. Trifecta. And then here, component bottlenecks. Obviously, NAND, DRAM, down the hard drives, beyond that. Okay, these are the bottlenecks. That's fine. On supply chains, never run out of parts. Got a sales force handling the pipelines, every microprocessor, blah, blah, blah. Okay. We talked about that. Raising prices. Those are the components. Where is... Do they mention hyperscaler at all? Hyperscale. They don't. They don't even mention hyperscale. Enterprise. Whereas enterprise, they do a lot. Very dead with neoclouds, advanced semiconductor companies, big tech, driving inference workloads. Enterprise side. Cloud service providers, you noted enterprise strength, but curious if tier 2 cloud service providers can potentially offset any change in linearity of demand of enterprise. Okay, so this is important. Enterprise is key for Dell. Hyperscalers, not really buying from Dell. So let's see. I can clearly say the longer-term conversations we're having with customers are multi-year in nature. How they secure supply. Those discussions are underway. It's really about access to supply. So that always makes me nervous because, like, are people to me, that's a red flag. I'm actually going to mark that as red. Are people, I'll write that down in my notes too. Are people just using Dell because they have the supply secured for now? Right? They're like double ordering is a risk factor as well in the chip business. So double ordering, a risk. Dell has supply now, but if supply comes into balance, does that hurt the Dell pipeline? Probably yes. You know, so if Dell has supply and supply otherwise is constrained, Dell wins now, but not later. That's part of the story, right? That's at least part of the story, right? Obviously, Dell is not just not just a supply warehouse. You know, it's more than that, but there's some part of this. Okay. Okay. Large number of pipelines indicate continue next set of customers or pipelines are good 2 quarters out. And what was really interesting about traditional servers as an example is we saw pipelines grow in the quarter greater than historic norms. We saw 2 quarters showing more customers looking to get access to technology. I believe this. This is that enterprise broadening story, which I'm a bull on. This is enterprise broadening. We're seeing budgets grow. We're seeing budgets shift. I believe that. Okay, so this is going to be supply. Okay. We're seeing double-digit orientation growth from our CSG business. Okay. Okay. Let's see what else we have on enterprise. Enterprise customers, Dell World 5000 customers, up 50% in the last 6 months. Wow. Yeah, so I mean, that's why they're winning the enterprise stake. So it's not hyperscalers, Instead, it's sovereign, enterprise, and neoclouds. That's where they're selling. And customers up 50% in 6 months is incredible. The Claude moment really benefited Dell as well. That'd be my take. Okay, let me get this cooking. What do we got here? Okay. All right, what else? So we're gonna call that the Claude moment. The Dr. Claude moment. All right. What else? Claude, enterprise demand, enterprises adopt. Oh, what's this? Okay. We are engineering the whole data state easier for enterprises to adopt, accelerate their AI needs, and architecture matters more. That's fair. Like, anybody can buy a GPU, but can you set it up, in a good server architecture? Packaged up and presented to our entire customer set, specifically targeted AI customers. Seeing traction. Yeah, this is much harder than just go buy the chip. There's much more than just go buy the chip. Dell packages. Fair. And I think as you get more, like, open weight, honestly, probably benefits Dell a lot as well. I wonder if they talk about that. Let's see. OpenAI. Oh, look, we got ServiceNow and Palantir and CrowdStrike get a shout out here. Bringing Gemini on-premise with confidential compute. Ooh, see, look at that. Confidential compute so the customers can run AI closer to the data. Dell is expanding the AI factory, giving customers a choice, helping them protect their data. Yeah. Data protection. Hey, Kevin, saw your vid from earlier today. Tell me some info, POV. Let's see here. MLE. Working on AI workloads. Is that machine learning expert? I could be wrong about that. Let me see. Haha, machine learning engineer. Okay, close enough. Companies are relying on zero data retention guarantees and contracts to protect their data from being trained or harvested on. For sure, some fear that it could be stolen, but not strong IMO. Bringing AI closer to home is definitely happening as a trend. I know someone at a compute provider reporting this trend. There's now co-location of providers, data centers that let you bring your hardware and rent lease the space. Yeah, Oracle's doing some of that. You know, bring your own hardware, basically. So there's a good point to that. Oracle, bring your own hardware. But then this is also interesting. Confidential compute here. Let's see here. Data protection. Okay, yeah, we wrote that down. Opportunity remains durable. Exited the quarter with an AI backlog of $51 billion. Demand continues to exceed supply. Memory is the primary constraint. Expect to exit the year with primary backlog. 5,000 customers. Customers are not just buying components. They're looking for integrated solutions. Yeah, like if you could just go plug in the server rack, it's so much easier. Just plug in the rack, basically, right? Okay, yeah, that's fair. So this is also then very much still at risk of, well, I wish they mentioned the open weight. But obviously, you're still in the AI cycle, but open weight probably benefits them a lot. Okay. All right. What else? Let's go see what else is going. Somebody says oil is catching a bid. What's going on? What's going on with oil and therefore the stonks? Okay, we've got bonds up again. Oil up positive now. Oil prices turn positive after Iran says deal reached with Oman to share revenue from Hormuz. Yeah, makes sense. Higher costs, more inflation. Q's down 21 bips. It's all collapsing. All right, let's go into here. You know, just to finish this thought, open weight gets hosted privately, so it's much more appearance of security, at least. Actually increases the need for cybersecurity, right? Increases need for cybersecurity. If all enterprises want their own servers, we need more server and endpoint management, you know, which is then bullish for SentinelOne, CrowdStrike, Cloudflare. Enterprises increasingly prioritizing AI economics. Yes, we know that. So that's still a shift that we're in then. AI economics shift to open weight equals save token money, right? Save token money. If Dell can plug you in fast, that's desirable. And that's a big W for Dell. Okay. What else? Agentic AI solution. Desk side agentic AI. Desk side. Let's see if they... Desk side. At Dell Technologies, we build momentum with desk side server storage and data management. Ah, there it is. See, look at this. That's literally it. Desk side. Our desk side agentic solutions help enterprises run production-ready AI locally, supporting use cases like coding, research, and secure private assistance while keeping it on-prem. AKA, buy this, run AI locally with ease. So that's honestly a really smart sales pitch. So smart. Okay. All right. That's pretty good. Open weight, honestly, really bullish for Dell. And the valuation is a little elevated, but you know, but the open weight to on-prem situation might just now be starting. All right, so Dell, cyber beneficiaries of that research, like healthcare, you know, big cycle winners. Pretty much any enterprise that can use AI, any enterprise that can cut costs with AI. It goes back to my original thesis. My original AI thesis was that all companies win with AI by cutting costs. The biggest losers are humans, like labor, basically. Hence, the entire market rises. Okay. Cool. Let's go explore a little more. All right. What do we got over here? Listen in.
Talk about this landmark deal today in the wealth management space. Vanguard is buying the wealth management platform Altruist for $4 billion. What is Altruist? Well, it's a wealth management platform founded in 2018, basically an upstart that was intent on challenging Schwab, Fidelity, and others. So now you have the world's second biggest investment firm wanting to expand its reach into that area, into financial advice, which is a relatively new area for Vanguard itself. Josh Brown joins us now on the phone. He's an advisor and shareholder in Altruist. It's notable that if we take a look, Josh, at Schwab, Raymond James, they're red. They're red because of this deal, more than likely, which you say is going to rock this industry. Guys, I'd like to see those stocks, please, if we could. So give me more information on why you think, Josh, this deal is so important.
So thanks, Scott. You and I sat with Jason Wenk at Future Proof this past March in Miami, and we talked about just the idea of AI and a tech-native brokerage custodian all of a sudden coming in and disrupting the realm of wealth management. And what this does is it basically puts, as you said, the second largest asset manager on earth and its resources behind Altruist and their AI solution, which is native to the platform, called Hazel. And I think it's an earthquake because, for the most part, Altruist is thought of as a venture-backed startup. And a lot of wealth managers with billions and billions of dollars are hesitant to trust a new platform or a neo-custodian with their clients' money. All of those questions about the brand, about the provenance, those all go away. Now it is a wholly owned subsidiary of Vanguard.
Yeah, I get that. It's that reputation on of the platform. Yeah, good for them. I mean, Vanguard killed it with low-cost ETFs, honestly. I mean, you got to give them credit for bringing that mainstream. So, almost back at $90 on oil now. And yield still 4.47, really not going anywhere on yields. 2-year and 10-year spreads at 44, below shock level still, which is fine. Okay. SpaceX is here. Let's see what else is cooking. Journal. Let's go look. Let's go to Politico and see if we got anything juicy there. Okay, that's good. Politico and Axios, and honestly, maybe even WAPO. Meta agrees to that deal. Election integrity threat, defunded. Okay. Jeffries faces impeachment dilemma. So, no, the political drama drives me nuts. Apple set to debut foldable phone. There's some value to that. I'm kind of excited about that. September 9th invitation, where the company is expected to unveil its first foldable iPhone. I mean, this will really be like the first transition to like a new product that isn't just like the Apple Vision that is for a very niche audience. Apple's preparing its latest devices as rising demand for AI compute puts pressure on the company. The event is 10. Yeah, let's go see what rumors we have on the foldable phone. Apple foldable phone. CNET. Let's see. Here are all the leaks. Okay, Apple's iPhone Ultra will use Touch ID rather than Face ID. Why? There wasn't enough room for the true depth camera? Are you kidding me? That's lame, bro. That's lame. Come on. That is kind of lame. Foldable phone could be released as early as September 26. Could go by iPhone Fold, iPhone Ultra, or iPhone Flip. Book style format. Between $2,000 to $2,500. Wow. Yeah, Chris, you could look for some house hack updates on the, if you download the Meet Kevin app, there's a tab on, in the Meet Kevin app called Investor Updates under the Data tab. And then there's a bunch in there on, you know, we're just putting all the latest updates in there. So when you're in the app, you'll be able to just click on data or news and then go to the investors button. And then, you know, here's an update I did on August 24th, which is just a couple days ago. So you can check it out over there. Apple's fall launch is right around the corner. Samsung may not have the foldable spotlight to itself for much longer after years of rumors. This could finally be the year Apple unveils the first foldable phone. But challenging. But announcing it is getting it into people's hands is going to be challenging. Says Apple could unveil a foldable phone along the iPhone 18, but wait until later in the year to put it up for sale. That would suck. iPhone Fold might even change. Let's see. Leaks increasingly point to iPhone Ultra, a label that would elevate the device above the Pro line. Right, Ultra to Pro. That makes sense. That's sort of in line with their thesis. Was unaware we had an app. Yep, the whole company's there. So house hack, very brief update. House hack, over 100 tenants, lots of properties, lots of tenants. Here, you know what? F it. We'll do it live. We'll do a really quick, spontaneous update. Why not? We'll do it for Chris. Okay. Okay. Let's just do it. We'll do it live. Hey, so if you've been looking for an update on house hack and you've been busy doing whatever for the last few years and you want a quick overview of, Kevin, just give me some TLDR. Like, give me like an 8-minute update here, okay? We got the clock ticking. 8 minutes. I don't got more time. Just let me know what the heck is going on. Okay, here's the scoop. We changed the name from house hack to Reinvest. And that's because the company is expanding what it does. Rather than only investing in real estate, we now have a software portion of the business as well that so far is self-sustaining and is generating its own operating profit, which is great. So that means we're really not leveraging the core of the business. We're building this alongside the business, and its own income is generating continued investment into that software. So what is that? Well, there are a few things that we do. First, the Meet Kevin app got ingested and turned into the Reinvest app. You should download it. It's like a great way to look at what we've built. So the Meet Kevin app is on the Apple and Android App Store. It's now called the Reinvest app. It's owned by house hack, now Reinvest, right? And so what does it do? Well, the app does a few different things. We've got a desktop version as well for it. A few different things. We've got the data tabs. We've got an investor updates tab, video tab, daily wealth, which is some stuff that we share information on, or when we do research, we throw it on here. It's all through the Reinvest app. If you go to the wire service, we've only had out now for maybe, a month or two now. This is something that's included. So for people who use the app, you can now use the wire service, which is great. We've got a whole suits tab in the actual app so we can see what's going on with insider trades or otherwise. And so we're building out sort of this financial tool that people can use. And there's a basis that we're really building with that app. So while we have over 100 tenants and our wedge deals, right, the original basis of the company is still present. We still buy wedge deals. We still develop ADUs. We finished our first 2 earlier this year. We're developing land on a ski in, ski out resort location. We're building in the planning stages for building dozens of more ADUs. Like all those, the normal things of still buying real estate, all that happens. We just have this sideshow where we are also building software. And it's really cool because we kind of keep adding things to this sort of everything app, if you will, for people who like this community and the finance stuff that we analyze. And so coming out of that, there are 2 things that we found people really wanted. One was the Wedge Finder, which was a very original tool that we used. I'll pull it up on the actual phone app. The very original real estate tool that we created for helping us find deals. And we were hunting for deals with the Wedge Finder. And we've bought quite a few of them from it, which is really exciting. That Wedge Finder is now a product that we license, which when we first launched the company, a lot of people were like, oh, Kevin, this is awesome. You should license this. This is great. And so for an example, if I pop over to the phone screen, which is this one right here, there we go. If I pop over to the phone screen right here, you could see I could put in a county, update counties or whatever. So in this case, I have Brevard in. This was from yesterday. We did a little analysis on it to see how accurate it was. And this is all still in beta. It's early, but it's out. Like people, you could use it now, which is cool, right? And we sell it. Until Friday, we sell it as a lifetime subscription, and then we're going to a monthly model, which is actually really cool if you think about it as like a house hack investor, reinvest investor, because it means there's that annual recurring revenue potential money stream. But anyway, so like here's how basically it works. Our AI, our proprietary AI that we trained, looks at the images and decides, hey, how much work is this property going to need to fix up? What do we think the property is worth in its after repair value? And then what's the delta? So here's an example, and we analyzed this yesterday just to sort of like check, like, what do we think about this? We actually think this property you could probably buy for like $650K because it's been sitting on the market for a little bit. And the after repair value was pretty accurate that the AI came up with at 861. I was mid-8s, potentially up to 900 as a ceiling. So 861 is right there in the box, and $70,000 for a reno is reasonable. That gives you a potential $141,000 equity gain. So in other words, House Hack now has a software that we can license to other people to where you go, hey, I want to buy real estate in America. Where can I get a good deal? You open it up, put a county in, boom, it tells you where, these are the best deals you should look at first. We even have this as a negative. Like if you scroll, I think if you scroll all the way down, it's sorted right now by the best deals. But if you scroll all the way down, it'll actually tell you some deals you might lose money on when you buy. And so like you get down over here, it's like, oh, don't buy some of these because maybe it's going to cost too much to renovate or whatever, as an example, right? Early, we say everything regarding our AI is the worst it's ever going to be today, right? So we are also doing this with stocks. That's more of a side product to the side product that we've kind of just sort of like added in the last month or so as well. Like for example, hey, Kevin analyzes a deal like this. The balance sheet matters to this weight. The growth forecast matter to this. The red flags from earnings calls matter to this. And so we can use a combination of weights and algorithms and our adjustments and basically come up with price targets for companies like Meta right here through our stock AI tool inside of the app. So really now what you have is you have this company that, just to bottom line it basically, you have a company that's got roughly $100 million in assets. That's market value assets. So that depends on, obviously, it's like, I don't have appraisals to point out right now. This is just ballpark market value, top of head estimate. It's about $100 million in assets. About 16 million of that is in liquid assets. The vast majority of that is cash. Like over 85% of that $16 million is just cash or like, really short-term money markets, tiny little bit of equities exposure, but a fraction compared to the whole company. So you're really sitting at, 84, 83 and a half-ish or whatever as real estate, right? That's kind of where the company sits right now. There's no bank debt. No bank debt at all, which is kind of cool because that gives you a lot of optionality in the event rates fall a bunch. We kind of have this piggy bank we could go buy more wedge deals with. We are thinking and considering, because usually in the fourth quarter we like buying real estate. So we're thinking about possibly doing some form of preferred dividend funding round where if people want to invest in House Hack, they could get some kind of preferred dividend on a new funding round. Originally the company was $1 a share. The last funding round was $1.40. This one will be higher than that. So there's growth in the share price, but the new one will come with some yield as well. What's very interesting too is if we go shopping, our expectation, I would say probably 75 to 85. I would say 75 to 85% of the money that we raise when we raise money, and I got to look at exactly what we wrote down. I'm just doing this all on the fly, but somewhere around this range, if we raise money, of the money that we raise, we'll just go back into wedge deals. So like our original focus is still invest in real estate. Nothing's changed there. In fact, we just looked at this morning. We thought it was really interesting. The S&P 500 has about a 1.7% exposure to real estate. House Hack to me is like 84% real estate. And then cash that's going into real estate developments, right? So we're pretty dang exposed to real estate. But then we also have this sort of sideshow, if you will, of the Reinvest app, the artificial intelligence on the home side, the artificial intelligence into the stock side. And if that generates ARR, hey, if it sustains itself, great. If it makes money on top of that, even better, great. It just means the company is, in my opinion, more stable and it basically de-risks the company. That's sort of my view. So that gives a little bit of an update on, the House Hack, to Reinvest. I'm at 8 minutes. I'm at 9 minutes now. Great. Max says, House Hack timeline for IPO, absent major correction. Well, I've always said 2028 to 2030 is the goal. I think if I could perfectly predict it, I'd love to have the cleanest cap table possible, which I think we would have by 2030. Convertible bonds have converted, preferred dividends have converted to commons. Everybody's got common shares, and then you could do IPO. So like if I had a preference in that, it'd probably be closer to 2030. That's just sort of where the head is expanding now. But a lot of this has to do with the economy. I mean, like and our sales. Like what if our Homes AI just blows up over the next 2 years as we really start like pitching and marketing this to brokerages in a B2B business, right? Business to business. Anyway, it might make sense to IPO sooner. So a lot of that's going to depend on how the business grows. But I think that's a totally fair question. So I appreciate Chris for bringing it up. Do you think if you use Claude API, your data is not secure? Oh, I think you're referring back to the last segment we were talking about. And it's one of the reasons we don't know, right? Like Gemini and Google tells you that if you use their enterprise AI, your data is secure and they won't train on it. You have to believe that as much as you can, especially since Google and OpenAI and Anthropic are very curious about building their own software businesses. So for example, at Reinvest or House Hack, we just run it on our own hardware. Like Reinvest owns its own GPU stack that we could run all of our AI on. And they're running 24/7, working every day. And it's not just GPUs, it's CPUs. And so some of the money that we have does go into that sort of infrastructure. But I think that's money well spent. So that's it. The company's, in my opinion, doing really well. We're really excited about it. Obviously, I should probably say this video is not a solicitation. There is no fundraise right now. Maybe we'll do a fundraise, in a month or two or whatever, but there's nothing right now. And, we think we're cranking. I think we're kicking butt. So that gives you a little bit of an update. Okay, cool. So that's that. Let's now go back to let's go listen in over here for a moment.
Minimum. Rob, what do we
Minimum.
think? You have NRG, Vistra. Seems everybody loves these names. What now?
We were early in them, still up a lot. Now I think it represents an opportunity because still the main bottleneck is energy in the data center build out. It doesn't appear to me, despite the political backlash, that there's going to be materially less energy needed to power the already existing data centers that we have.
Yeah,
that
but you're
are
not
yet to
buying,
be built
these.
out.
You want people to own these names for the existing data centers? Isn't the whole point?
Well,
the growth of these businesses is going to come from the
you've re-rated to
proliferation of them.
You've re-rated to 11 times in many of these cases. I mean,
well, what do you?
That's boring. Let's go back to this Apple part here. Initial run of the foldable phone will be around 10 million units, and production could take about 3 to 5 months to ramp up. That's about 30 to 40% slower than the iPhone 17's production. Yeah, but it's going to be more expensive. So we'll see how many people actually want to buy it. iPhone phone will be book-style foldable. Screen, little or no crease, according to a report by Chinese publication UDN. Creaseless phone. And that'd be crazy if they could pull that off. Breakthroughs have been made in creating a crease-free design for the iPhone Fold. Wow. But you'll pay dearly for it. Could cost $2,400, which would make it the most expensive foldable phone. It just has to, I guess, stretch that much that it makes it seem like it doesn't have a crease. So when it locks into place, it just really has to stretch down. Apple hinges could be made of liquid metal, an alloy possibly provided by Liquid Metal Technologies, which Apple has had an exclusive contract with since 2010. I'm curious what the dimensions would be. Foldable phones represent a tiny fraction of phones sold globally. iPhone specs. Here we go. Predicted the iPhone Fold could have a 5.5-inch outer screen, 7.8-inch inner display. So how does that compare to the current iPhone, screen size-wise? These are the dimensions. It would be the same high-density battery cells as the ultra-thin, include a hinge made of stainless, favorite metal, okay, that's fine, titanium alloy, whatever. Let's get the screen size of the iPhone Pro. Okay, this is just a prediction on its size, but iPhone Pro Max 17 screen size. It is 6.9 diagonally. So this is expected to be 7.8 inner display. Okay. So yeah, but the formula on that gets funny because of the diagonals. 7.8 inch screen, because I think it's going to be bigger. Because if I just divide the two, it'd be 13% bigger. Screen, how much bigger than 6.9? Let's see if AI could give me a little AI insight. Yeah. See, look at that. 13% larger diagonally offers 28% more surface area. That's pretty good. So you scale quadratically. I'm too old to remember that from high school. Okay. That's pretty big. And so now if I take the iPhone and I think 25% bigger, you know, that would be like, that'd be a chunk bigger, man. Even if it came out this way, you know, it's almost like a finger and a half bigger. That'd be kind of cool. 25% larger. Yeah, I wonder if I have a ruler in here. Just sort of look at this as like, 7.8. You know, try to imagine it 25% larger, but I don't have a ruler. Oh well. You know what? This would be a perfect task for like AI to just sort of like generate a side-by-side. Let's do that. Let's just have like Claude or something do that. Generate a potential mock-up side-by-side of iPhone 17 Pro Max 6.9-inch diagonal screen versus 7.8-inch screen unfolded for iPhone Ultra Fold phone. It should be about, was it 28% larger surface area? Larger surface area. Show them stacked, outlined to really visualize the difference. All right. Let's see how that goes. Okay, we'll see what we end up extracting out of that. Wall Street turns on Scott Bessent. Okay. Meta, okay, we talked about that. Yeah, place 3 officials only. Okay, that's Trump mail-in. Blue states file new lawsuit over Trump mail-in ballot program. It's always lawsuits. Pentagon claims to have found hidden files. Pentagon officials on Wednesday claimed they had uncovered classified documents that were hidden away in safes where they would not be found. That shed light on the chaotic end to the war in Afghanistan years ago. Anything to make Biden look bad, I guess. Although that was a disaster. Let's see here. Biden administration inappropriately downgraded on a deeper look. There's more. The deeper we look, the more there is to look, he said in a message. We are finding what we did not expect. They added that we recovered highly relevant classified documents that should not have been disclosed or hidden in safes. That's it? They don't give us any insights. Oh, come on. Pythagorean theorem in middle school? Yeah, that's true. It's like 7th grade. Okay, cool. What else? NVIDIA, you know, you kind of expect this. A little bit of slippage going in over here. So not a surprise. Pretty red, though, overall, the day. Bitcoin still holding on to 78. Okay. Let's see what else we have. Then we've got Dell we should talk about. Do a little summary on Dell. I just want to get this iPhone piece. I guess we could do the Dell summary while that iPhone piece loads. Okay. Yeah, let's do a quick Dell summary. Okay. That we will do. That we will do. Just get the wire up. Okay. I tabbed away from the wire. All right. It's a quick Dell summary. Could Dell stock be a massive beneficiary of the move to open weight models? Even NVIDIA is now getting into supporting open weight models. Of course, OpenAI and Anthropic probably don't want to get into open weight models, especially since they make a whole lot of money on their closed weight models. Now, to be clear, the information just reported that DeepSeek has annualized revenue of probably somewhere around 400 to 600 million US dollars. If you think about that, that is a drop in the bucket compared to the annualized revenue of the $65 billion that Anthropic has. But to me, what it shows is how much potential there is to move frontier level AI to open weight. And how could Dell potentially be a massive beneficiary of those open weight models? Really important, so we're going to talk about in this. First, quick understanding regarding open weight, just So we have a baseline here. It's different than open source. Okay, open source would be like, here's everything on how our AI works. Instead, with an open weight system, you're really getting a pre-programmed software set that you can then fine-tune yourself on your own servers, and then nobody sees your fine-tunings or your adjustments. The benefits of that are you can run that on your own compute. You don't have to pay a lease to anyone. You could run it on your own hardware. You could run it locally. You could run it securely the way you secure it. Probably does mean there's got to be some more cybersecurity spending on endpoint management and server management for people on location. But Dell is very interestingly positioned to take advantage of exactly this transition to open weight models. Now, I'm not exposed to Dell, so I don't want to come across as a shill for Dell. I actually think the valuation has gotten a little ahead of itself because of the momentum that's come in, mostly post this Claude explosion. But I get it, because let's actually look at some of the details. This is the earnings call from Dell, the last earnings call I had. They've got another earnings report coming out in about 6 days. But this is really smart. Our deck-side agentic AI solutions help enterprises run production-ready AI locally, supporting use cases like coding, research, and secure private assistance while keeping sensitive data and IP on-prem. This is like so freaking brilliant. Basically, Dell is saying, look, man, you want to run AI locally? You want to run these Chinese models, the Qwen, the DeepSeek, the Moonshot, or NVIDIA's open weight model? No problem. We will sell you the GPUs, the CPUs, the rack, the switch, the UPS, not the shipping company, the battery. We'll sell you the whole kit and caboodle. Just pay us and we'll come install it for you. And then you'll be ready to use our production-ready software, which they call deck-side agentic AI solutions, so you could start running AI yourself right away. That package is actually really, really smart, because anyone can just go buy a GPU, a 5090. Anybody can go buy, an RTX 6000. Anybody can, frankly, call up NVIDIA and get on the sales calls with them and start trying to put in orders for the multi-million-dollar frontier level racks if you want. Good luck getting an allocation, but you might be able to. Dell has the supply to make that easy for their customers, to where they say, look, we'll just go plug in this whole rack for you and it'll come with the hardware that you want. We've already secured all of that supply. And they call it a trifecta. So the trifecta they refer to is GPUs to train, CPUs to operate agentic AI, NAND to store, and they call it a trifecta of bullishness. And they actually brag about how they are able to onboard so much enterprise, and they're seeing more customers trying to get this hardware. They're seeing budgets that are growing, and they have the supply necessary to sell to those people. That's their argument. Obviously, memory pricing, which they talk about somewhere in here, is always going to be a margin issue. Memory prices continue to rise. I mean, it's not always going to be a margin issue. It's going to be a margin issue for the near-term future. But they argue that they're seeing a lot of demand from enterprises, and it's getting more extreme, not less. They grew their customer base 50% over just the last 6 months. 50% more customers ordering these sort of on-prem hardware sets. And they don't sell to the hyperscalers. They sell sovereign, neocloud, and enterprise. And that's, I think, where AI is going. You know, the hyperscalers are trying to sell to OpenAI and Anthropic. Everybody else is trying to work with the enterprises. Like, how can you use practical AI, whether you're creating cancer therapeutics like Moderna, or maybe you're a company like, I don't know, Meet Kevin and Meet Reinvest, right? Like, obviously, you already know this. We've got a coupon code expiring J-Hole on Friday. But, I mean, we run our own GPUs. And, we've had to set up the Linux-based servers and do all that. It's hard. Dell kind of does a lot of that for you and enables you to run your own data. So we don't have to give our proprietary data and weights and algorithms that we use to help determine where there's a good deal in real estate. We don't have to give that data to Claude or OpenAI. That's exactly what Dell is trying to enable for people. We're going to make it easier for you to spend money on servers and then run your own AI, which is brilliant. I'm a big fan of it. Speaking of which, we are getting rid of the lifetime access to the Reinvest AI. It's going to be going to a monthly annual recurring revenue style subscription. So if you want to lock in that lifetime access, make sure you use that coupon code JHOLE before it expires on Friday. We'll also have an expiration simultaneously for the Meet Kevin membership on a Friday. But let's keep focusing on Dell for right now. And if you have any questions about those, by the way, just email us at staff@meetkevin.com. Okay, so what do you have right here? You've got them saying more customers are looking to get access to this technology. And there was really this explosion in customers over the last 6 months, which I attribute to this Claude Cowork moment that we had in March and into April, where people are like, oh my gosh, this is it, the coding revolution, right? That does create some of a risk factor because it does mean the stock is potentially hyped up right now because they have the supply for enterprise companies that are like jumping on the bandwagon post-Claude. You know, for example, we've been building out our AI stack for the last year, but post-Claude in March, you know, the GPUs that we bought a year ago have doubled in price, right? So where are you in the hype cycle? I don't know, right? That's obviously going to be a risk factor here. But I really do believe Dell is going to be a huge beneficiary of open weight models, especially since it allows you to protect more of your data on-prem. I mean, look at this line. We continue to expand Dell AI Factory ecosystem with partners including NVIDIA, Google Cloud OpenAI, SpaceX AI, ServiceNow, Palantir, CrowdStrike, blah, blah, blah. And we are running Gemini models on-prem for customers who want confidential compute so customers can run AI closer to where the data is meeting data residency, privacy, sovereignty requirements, blah, blah, blah. There are a lot of hospitals, for example, that have HIPAA requirements. There are financial firms that have to prove that their data is secure to FINRA. There are banks that have to verify that their data is secure and their customers' data isn't getting screwed. In my opinion, that actually drives more of a need for cybersecurity endpoint management, bullish, Net, Cloudflare, CrowdStrike, SentinelOne. But Dell is a big winner here. We got to give them credit where credit is due. And so let's do a little bit of number math over here on Dell. First of all, their balance sheet, I call it yellowish. Okay, if I put together all of my short-term assets, I have enough money to pay my $61 billion in bills. They have a lot of bills to pay because they buy a lot of, supply. And then they need to turn around and sell the stuff. But they are selling the stuff. They've got like over a $50 billion backlog of stuff that they got to sell. So I'm not so worried about this. $27 billion of long-term debt. It's not great. Their free cash flow is decent. It's actually surprising. They got a 4% cash flow yield because it's a $300 billion company, which even after its run up into the 400s, it's still not that big of a company. Their margins aren't great, and that's probably what kind of keeps like a boot on their neck, if you will. But they're doing some stock buybacks. They're only issuing a tiny little bit of debt here, $325 million versus the $2.6 billion in dividends and repurchases they did. So cash flow's fine too. If we look at the income statement, this is where you're going to understand more about the company. Their margins are compressing. AI server margins suck. They're like 4 to 7%. They're really bad. So the more of this AI stuff they sell, the worse their margins get. You could literally see year over year their margins have declined from 21% to 17%. So their margins are in decline, but that doesn't really matter because their operating income is skyrocketing because their SG&A and their R&D doesn't really move. Like you increased OpEx 9%, which basically means any increase in gross profit, which is this number right here, this $7 billion from $5 billion, that just flows straight to the bottom line effectively. And so their net income has skyrocketed like 3x. So their net income is exploding. Their projected EPS is $18.73 for the end of the year, ending January 2027. Their growth projection sits at about 16% growth per year, which actually means they're trading for about a 1.56-ish peg right now. Their net margin kind of sucks though. Right? They're only bringing like 7 to 8% or whatever here, 7.8% to the bottom line. That's like a defense stock, Lockheed Martin kind of margins. So the margins suck and they're kind of worsening. But even though the margins suck, they're doing so much more freaking business that their EPS just keeps growing. And so that's where you have to look and say, the growth is good. they're growing that earnings per share at expected to be 16% per year, but what multiple do you assign to them? If you assign them a 1.56 multiple, they're fairly valued today. If you assign them a Lockheed Martin kind of multiple of like 1.2 on a PEG basis, they're overvalued. At 1.2 divided by 1.56, they're overvalued by 23%. So a little aggressive. Which I don't think you should, because I don't think structurally they're ever going to get to these higher margins. If you really want to be mega bullish on them, you could argue that maybe their margins will expand and they'll be able to justify, like a 2 PEG or something in the future, which at a 2 PEG, they'd have upside of about 30%. So I think Dell is going to be a major beneficiary of the move to open weight. I'm really bullish on what's going on with Dell, but I think right now they are a little aggressively priced. I think their valuation isn't the most ideal. Balance sheet is yellowish, and they've got pricing power right now because they've got supply. They've also gotten really hyped up after the Claude moment, so I think there'll be better opportunities to buy it. So in a weird way, I'm like bullish on what they're doing. I'm just bearish on the timing for acquiring them. Our Stock AI, for example, which you can get in the Meet Kevin app, indicates that their pricing power is mid-range, balance sheet yellowish, kind of like what we analyzed there, but their valuation's a little aggressive right now. I got a red flag on valuation and a red flag on moving average because obviously the stock has done exceptionally well. So, I guess the way I would bottom line it is I love what they're doing. They are selling the picks and shovels for enterprise AI, and I am convinced much more spend is coming to enterprise AI. Just don't like their pricing here. I'd personally wait for a better opportunity, but I couldn't be more bullish on the move towards enterprise AI. So there's my take on Dell. Okay, cool. So that's a little bit of a Dell summary. Let's go see if that Apple piece is ready. I think it is. Okay. Let's go see. Dell. Let's see what we got with them. Let's see. Where is it? Where is it? Where is it? Here it is. Oh, wow. Interesting. Oh, I like the graphic a lot. Okay. So let me screenshot that. Screenshot this. That's kind of cool. Yeah, look at this. This is kind of cool. This shows you that size difference. But then again, is that worth like twice the price, right? It's a cool little AI gen though. But let's touch on that. Obviously, the pitch from Apple needs to be on-device AI, but we might still be a little early on. AI on device. It's getting better, but it's been a long time coming. Okay, so the Apple event, what was it? It was September 9th, I'm pretty sure. We'll see that in just a moment. All right, let's do a little bit of a summary on Apple. Apple just announced their next iPhone event, and this is pretty exciting because the rumors are that we're expected to hear about the foldable iPhone Ultra. Obviously, if we don't get a foldable phone, there'll be a little bit of disappointment. But a lot of people are really enthusiastic that the new CEO, now that Tim Cook has had his farewell party, which, by the way, Steve Jobs' wife went to, which is kind of cool. I was like, oh, man, that's cool. Like, I'm a big fan of that. And, I'm a Apple user, but I'm also a Windows user. Hey, I'm excited. I'm excited for this foldable phone idea because the rumor is that we might actually be able to get a creaseless foldable phone, although it's expected to cost a whole lot more, and they're expected to have way less supply for this puppy. At the same time, that could at least the thesis is, usher in maybe better artificial intelligence on device for Apple. My opinion is it's still going to take a few years to really get edge AI to be great, but we're already seeing improvements. For example, you can now search for photos using text, which they announced like 2 years ago you'd be able to do that, but it's actually starting to work now. The AI summaries in email or text are actually useful. It's just taken 2 years to get some of this stuff. So the use is coming for Apple AI, and I think it's just going to kind of slowly keep getting better and better. But the big showstopper here is going to be this iPhone Ultra. Now, apparently the rumor is that the iPhone Ultra is going to have a 7.8-inch screen when it's unfolded. So I remember, really back in middle school and high school, when we measure diagonal line increases, you get a much larger increase than just the difference in size of the diagonal. So, for example, this iPhone Pro Max 17 is 6.9 inches diagonally for its actual screen. The iPhone Pro Ultra, or iPhone Ultra, the folded one, is expected to be 7.8 inches. So what I did is I asked Claude to show me what that would look like, given that the screen size would be about 28% larger via the quadratic equation. Here's what it would look like stacked on top of an iPhone 17 Pro Max. So this is your iPhone 17 Pro Max. If you unfolded, or just to kind of look at, I actually think it should probably look a little bit wider than this. Maybe it would look a little bit more like this. But whatever, just to give you an idea of how much more real estate you'd actually be buying, that 28% screen area, it does give you more screen area. That's maybe a finger and a half more of screen area over here and a little sliver on the sides, or just more on the sides, right? Another way you could potentially look at this side by side is this. In terms of a mock-up. And so that now definitely looks like a much bigger phone than the iPhone Pro Max. The iPhone Pro Max is already big compared to the normal, like the OG iPhone 1. I got that right when it came out. And then I got, the iPhone 3G, which was the iPhone 2. I've been a big fan of kind of the ecosystem and seeing it all evolve. This is a big moment. The biggest component of this is that there are rumors that Chinese manufacturers have figured out how to make the crease on these phones creaseless when you open it all the way up. Nobody really likes that crease that you get feel as you're, trying to use a stylus on some of the Samsung devices, or use your finger to draw something or play a game or whatever. You don't really want that crease, or show pictures or watch a video or whatever. But take a look at this. According to a report by a Chinese publication called UDN, this is per CNET, or via CNET, engineers have made breakthroughs in creating a crease-free iPhone design for the iPhone Fold. And the product cycle has now moved from experiment to pre-mass production. The iPhone Fold is expected to potentially cost $2,399, which is obviously much more than the iPhone Pro Max. You're almost paying, depending on what kind of hardware you put in it, but it's probably going to be about twice the price. No crease is a hard feat. Creaseless comes at a cost, blah, 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 blah. But here's what we hear from the latest roundup on the rumor mill. We have the potential next iPhone release as early as September 26th. We expect the iPhone Fold to be somewhere between $2,000 to $2,500. That site said $2,400. I would expect it's going to be the 24 range, except that'll be like the base entry storage side. And then, of course, people will want to upgrade. And realistically, Apple might test a $3,000 foldable phone here with the largest kind of storage, which is wild to me, but it's going to happen. They'll really be appealing to that premium market. The event is going to be September 9th. That is Wednesday, September 9th. So that's in a couple weeks here at 10 a.m. Pacific time. As usual, they get really anal about who's, restreaming those events. They don't like that at all. So we'll probably just cover the headlines using the alpha wire that we have inside of the Meet Kevin app. Oh, I unplugged it. Anyway, so looking more at some of the updates that we have from CNET here. The iPhones are expected to be around, the foldable iPhones will be around 10 million units for production, which they expect will take about 3 to 5 months to ramp up. They argue that's going to be about 30 to 40% slower than the iPhone 17's production of 5 million units per month. This and so the 10 million initial run might end up creating a supply shortage, was what they're arguing. I think that actually just reiterates how Tesla, or not Tesla, I don't know why I'm thinking Tesla, how Apple is just going to end up pricing this even higher, and they'll actually be able to sell it out because some people aren't going to care if it's $2,500 or it's $1,800 or it's $3,000 with the storage. They're just going to buy it. They're going to want it. You've also got this talk about them using liquid metal from a company called Liquid Metal Technologies for an alloy on the hinges that could help snap this screen into place to actually give that creaseless feel. I would argue that, you know, the problem with the foldable phones now is when you fold them, a lot of them don't actually really lock into place on the out. And that's why you end up having a crease, because that tension of the crease kind of pulls the size of the phone up. If you really lock it out and it's like a perfect pull tight, you should be able to pull that glass so tight that you don't have a crease. That's like, there'll still be a crease, it just would be imperceptible. Hence, creaseless. So I'm excited about it. Oh, we got the alpha. Nope, still, okay. I got the alpha wire up. I was just looking here. Anthropic has agreed to spend $45 billion to rent AI cloud computing power from Nscale. Man, Anthropic just spends. And Apple, that's another place where Apple could really W, I think, is over time, especially with the new Mac Mini releases, over time, more and more people expect you could just run open weight models on Apple hardware. We were just talking about Dell and how open weight models are really a boon for companies that can sell products related to running hardware on-prem or running AI on-prem. Soon, you'll be able to just run these open weight models on your phones. Who knows? Maybe Apple will even talk about that. That could be another big W for Apple. I do think that Apple right now has a lot of pricing in it. This is just the earnings call from Dell here, where they touch on data protection and running some of this AI on-prem. But I do think some of Apple's valuation right now is already pricing in enthusiasm for the foldable phone and for the new CEO, the transition. Maybe they'll finally get to more of an AI push or whatever. As a result, I'm not as excited about the valuation of where Apple is right now, even though I'm really excited about the device itself. If this company were trading, you know, in the lower 200s again, oh, it'd be glorious to go pick up. But right now, little pricey where it is. It does set up for a potential disappointment at the event, even though I'm really excited about it. So we'll see what ends up happening. I think there's always a risk that analysts will think, oh, that iPhone Fold is too expensive. Nobody's going to buy it. And then, of course, everybody ends up using buy now, pay later, and a ton of people buy it. And people are like, oh, wow, dang, Apple really does know how to make money. And their margins are just fantastic at Apple. So you got to give them credit for that. Credit where credit is due. If we look at a valuation for Apple, I'll just do a quick look to see where they trade on a peg basis and the growth that Wall Street has priced in right now. The growth Wall Street is pricing in could be on the low side with the consideration of open weight models that you could run on edge compute on Apple devices. Right now, analysts are pricing in $8.80 of earnings per share for the end of their fiscal year. After that, we're looking at growth of only 8.61% on EPS, 11.21% on EPS, 8.55 in 3 years, and 9.62 in 4 years. If I divide that by 4, analysts are only pricing in 9.5% earnings growth at Apple over the next 4 years on average. The stock right now is trading for 35 times earnings. So 35 times earnings divided by 9.5, this company's trading for about a 3.7 peg right now. It's rich. There's definitely hope built into it. But I think some of that hope might be justified, because if those growth rates can really grow beyond just what Wall Street thinks right now of 9.5%, could end up being a fantastic company. Okay, cool. So that's the Apple piece. Okay, cool. Let's take a brief look over here.
Success across financial services, life sciences, the federal and state governments, media and entertainment, technology industry, really across the board. And it all, again, that all has the same similarity of enterprises wanting to be able to securely deploy AI agents AI agents access to the critical unstructured data and corporate knowledge in their organization in a way that works with their entire agentic stack.
This may be an incredibly stupid question, so you forgive me in advance, Aaron. But listen, you're a CEO of a company, you're running your own business, you got a lot to worry about. But you also have these like sort of macro thoughts about AI not going to hit a wall. So, how much, if at all, because I know you're running a business, I get it, and it's 1 p.m. out west, 4 p.m. here. How much are you going to watch NVIDIA earnings and guidance? Like, does that matter?
We watch every minute.
Central banker or whatever for AI, they probably matter to you even indirectly.
Yeah, I mean, we follow the entire tech stack, everything from 20-person new startups that are doing innovation in the next generation of continual learning or RSI type AI development, all the way up to NVIDIA and the chipset and how either production and capacity is going or where demand looks. Our daily decisions are probably not driven as much by that because we actually have a very clear view of the long term, which is you're going to have agents running around organizations that are able to process your data and automate work inside of these workflows. So we're sort of not susceptible to maybe the daily changes that I think Wall Street would care about in terms of what the numbers are this afternoon. But obviously, as NVIDIA goes, so much of this industry goes as well.
Well, how much do they matter, Aaron? Like, end on that. Like, how much? I know there's a lot of things that matter, but like NVIDIA must matter to the entire AI ecosystem.
I think it matters to the frontier.
Foundational to the entire AI ecosystem, and what Jensen and team have produced is we are all riding on top of the innovation, and
nobody wants to say anything bad about Jensen.
Generation of chips is rolling out into data centers that will both speed up AI as well as deliver the next breakthrough models. We are all riding on top of that. I was just being literal that whether it's 2% or 5% different from what Wall Street thinks is sort of less impactful to us. Just because we know that innovation engine is driving full steam ahead. But yeah, it's very exciting. To your central banker point, obviously, again, driving the core economy of AI at the moment that we are obviously built on top of.
Yeah, and I can't take credit for that. I lifted that off somebody from 2 days ago. I think. Okay. I just want to be perfectly.
Dude, we've been calling Jensen the J-Pow of AI for years. This is not new information.
Speaking of Mad Money and NVIDIA.
Yeah, we know. All right. Take a quick look at the Doomers. Come on.
Iran not giving up its leverage when it comes to the Strait of Hormuz, as the U.S. itself is trying to strengthen the economic pressure on Iran to get them to the negotiating
Well, that's right. You remember economic D-Day. This would be D+2, I guess, if we're keeping track, although many have wondered exactly how this is going to work and what Chinese entities have already been isolated and whether the administration is willing to go further, Tyler, with secondary sanctions. This is all going to be playing out in the days ahead.
Right, exactly, because we know that the U.S. has set out defined timelines for individual countries. And that's where we would like to start by bringing in our next guest, Ophir Falk, foreign policy advisor to Israeli Prime Minister Benjamin Netanyahu, joins us now live from Israel.
Way, they
Mr.
got
Falk,
BB?
thank you so much for joining us here on Bloomberg. Let's start there and your thoughts on the U.S.'s economic pressure campaign against Iran. Does Israel feel that...
Didn't they just say Bibi? I thought she just said Bibi's joining us. That's not Bibi.
...to get Iran to the negotiating table? And does Israel have a timeline, realistically, on when you think this will go into full effect?
Well, thanks for having me, Tyler. We're all in favor for what President Trump's doing and the economic D-Day, so to speak. And the way we understand it is that the friend of your enemy is your enemy. And you can't have countries that are facilitating terrorist entities like Iran, and we're all for these sanctions that are going to be put on these countries.
Dr. Falk, it's great to have you with us. For the sake of our viewers and listeners,
NVIDIA posts after earnings.
You have
after close
room with the Prime Minister for some critical meetings and have been one of his nearest advisors in this process. And so we wonder if the Prime Minister believes that sanctions can achieve what military action has not been able to.
we welcome the sanctions, and we don't see them as mutually exclusive with military actions. I'm sure the president has already said that one thing is for sure: Iran cannot have nuclear weapons. That's what the prime minister says. That's what the president says, and that's what's going to happen. So these sanctions are welcome. The Iranian economy is in the gutter. Their inflation, they have hyperinflation. Their currency is as weak as that they've ever been. It's like 2 million rial to $1 US. They have no employment. Their economy is in the gutter, and they're going to be hit. They're going to be hit even further. So those are the conditions. The conditions are being created for this terrible regime, these tyrants in Tehran, to be clobbered.
Will they be hit militarily even further? There's a question about whether the U.S. is, for instance, turning away from military action to focus solely on an economic approach.
Well, again, I think those two things are not mutually exclusive. And the main thing is that Iran cannot have nuclear weapons. That has been made clear by the president. It's been cleared by Israel as well. For my prime minister, made it very clear that deal or no deal, Iran will not have nuclear weapons as long as Prime Minister Netanyahu is prime minister.
Can you give us any insight into what those conversations look like right now between the U.S. and Israel in terms of viable options for military escalation that could be on the table?
Well, I can't get into details, but obviously everything's on the table, and there's zero daylight between the president and the prime minister. There's been great cooperation and coordination throughout the war. I don't think there's ever been a precedent of such great cooperation between a president and a prime minister, or between our armed forces, between the American armed forces and between the Israeli armed forces. The achievements have been incredible, unprecedented. Iran is weaker than it's ever been, and America and Israel are stronger than we've ever been.
Well, part of building the pressure on Iran, given that Iran's economy has taken a hit, though, is the most powerful move would be to have China no longer importing Iranian crude. That's a big question here when it comes to the threatened actions by the U.S. Do you have a sense on what the U.S. is particularly looking for when it comes to China, if a reduction of barrels would be enough, and if Israel is engaged in any diplomacy when it comes to perhaps pressuring China to cut off some of its financial lifelines?
Well, I'm not going to get into American policy, of course. American policy is led by the Americans. But I think it would obviously be in the interest of China for Iran to stop terrorizing the world. They're holding the Hormuz Straits as blackmail towards the world. You could only imagine what would happen if they had nuclear weapons. They would blackmail the entire world, and there would be.
And that's of course going to be the Israeli line. It's like, imagine if they had nukes. It's going to be even worse.
And America and Israel did the right thing to put this Iranian regime in its place.
I want to ask you, Dr. Falk, about what's happening or not happening in Gaza. You said in an interview recently that when Hamas says it will disarm, quote, the proof will be in the pudding, unquote. What does proof look like to Israel? And has this boiled down to a who blinks first?
Well, it's very simple, actually. If Hamas wants to disarm, they can disarm in an afternoon. They can just lay down their arms.
Yeah.
Now, the 20-point plan that President Trump introduced almost a year ago called for a 3D model to disarm Hamas, to demilitarize Gaza, and to de-radicalize the Gazans. That is a 3D model that we obviously signed on to. If Hamas wants to disarm, they could do that in an afternoon. That is the next step. And once they do that, we can move forward.
Can you give us an update on where those efforts stand? Where are we in that process toward potentially getting Hamas to disarm?
Well, the IDF Israel currently controls between 60 to 70% of Gaza. And we're demilitarizing that area right now as we speak. The remaining area is unfortunately being controlled to a certain degree by Hamas, and we're fully aligned with the BOP, and more importantly, we're fully aligned with President Trump and Jared Kushner that number one, we have to disarm Hamas. Hamas needs to put down its arms, and Gaza needs to be demilitarized, either the easy way, by just laying down your arms, which again could be done in an afternoon, or it'll be done the hard way. But either way, Hamas is going to be disarmed.
just lastly, what's the hard way? What could be done that hasn't been already? Gaza looks like the surface of the moon, Doctor.
Well, again, the hard way was what we've been doing for over 2 years. We disarmed over 30,000 Hamas terrorists by taking them out.
Yeah.
And if that's what needs to be done, that's what will be done. We prefer the easy way, for them just to lay down their arms and that would be over with. That hasn't happened for the past 10 months. They had the easy option of just laying down their arms. I hope they do that. I hope they do what they said they do, what they pledged to do, to lay down their arms, to disarm, to demilitarize Gaza, and we can move forward. But if that doesn't happen, again, we're ready to do whatever needs to be done.
He's the foreign policy advisor to Israeli Prime Minister Benjamin Netanyahu, Dr. Ophir Falk. We appreciate your joining us and sharing your insights with us today.
Yeah, all right. I mean, that was pretty much just, I would say, as you would expect, POV from Israel, which that's all right. It's their job. Okay, so as far as NVIDIA earnings are expected after the bell. I don't see any like pre-release of NVIDIA earnings on any tape that I'm looking at. So it's possible, you know, maybe market beats, like AI or something is going rogue. I don't know, who knows, but I don't see it anywhere. Obviously, we expect NVIDIA to beat because they always beat. The question is, how much do they beat by? So we'll see. So I think this is all very interesting. Okay, good. Now, remember to email us at staff@meetkevin.com if you want the Meet Reinvest AI lifetime access, the bundle for that between this and the Meet Kevin courses. If you're not already a course member, you could always join at meetkevin.com. Use that coupon JHOLE before a Friday's expiration. We are getting rid of the lifetime access for the Reinvest AI. So if you want lifetime access to this before it goes to a monthly model, you could join this. Probably the cheapest way would be to join the Meet Kevin membership and then get the bundle for Reinvest. But if you just want the Reinvest Homes AI, you could do that as well. This is at meetreinvest.com and this at meetkevin.com. I'll be back for NVIDIA earnings, but we're going to take a little bit of a lunch break, and then we'll be back. So good luck out there, and we'll see you soon for NVIDIA earnings. It'll be fun. Let's play like a goodbye video. Do I have a goodbye video? I don't have a goodbye video, do I? Yeah, I can always play this.
Oh man, your boy Kevin just lost lots of money. Oh, but that's okay. I am with you, with you. Oh man, your boy Kevin just lost lots of money. Oh, but that's okay. I am with you. Here we go, come on, push it, find the dip, find the dip. Here we go, come on, push it, find the dip, find the dip. Here we go, come on, push it, find the dip, find the dip. Here we go, come on, push it. Oh my God, what's happening?
First of all of this whining by Wall Street is making me sick. 140% of GameStop was short. GameStop was short. You can't allow Wall Street to short 75% of its stock, crush these companies into the dirt, thousands of stocks into the dirt. Then when the individual makes money, everyone's entrepreneurs. I have a kid who bought a house, paid $50,000 and bought a house. After decades of the shorts, you have to accept the fact that individual investors are playing the same game that you're playing, and now you're losing.
Here we go, come on, push it, find the dip, find the dip. Here we go, come on, push it, find the dip, find the dip. Here we go, come on, push it, find the dip, find the dip. Here we go, come on, push it. Oh my God, what's happening? Here we go, come on, push it, find the dip, find the dip. Here we go, come on, push it, push it, push it, find the dip. Here we go, come on, push it, find the dip, find the dip. Here we go, come on, push it. Oh my God, what's happening?
There's a lot of power in organizations online. Too many people can get together in a subreddit. I think it's really funny that the GameStop stock is going up and just affects the market in that way. There's 20,000 people live in a Discord who are spamming rocket emojis, yelling, "Go to the moon."